Securities saying the market is trading like a meme stock, writing this: I was wrong on how much we could bounce last week on apparent global central bank easing. We seem to whip around 1% like it's nothing. It is like trying, as you can, to seem really smart for a day or two, then really stupid for less of an apparent reason. Peter, I'm pleased to say, joins us now. Pete, good morning to you.
Yeah, good morning.
I think I remember you saying clearly that there was more chance of a 10% drop than there was a 5% rally. Clearly that wasn't right. Why has this market been so difficult to read from your perspective?
It feels like there's very little liquidity. So you watch during the course of the day and you see kind of these sharp declines, sharp rallies on, I think, very little volume. So I think that's made it very difficult. We've come to an age where it's clearly not meme stocks, but you have some of these very large market cap stocks trading quite volatile, and now you actually have a reasonably large 2x leveraged ETF on a single stock, which I've never understood why we would need something like that. So I think that's just amplifying these moves, making it incredibly difficult.
I'm guessing that stock is NVIDIA.
It is.
Yeah, based on the performance we've seen, I can see why some people might want to lever up. Not extrapolating out, all of that stuff, history, you know what I'm saying. Anyway, Pete, I want to get your thoughts on this. Rate cuts, not a prerequisite for this market rally, clearly, based on the evidence of the first quarter of 24. Why is that going to change anytime soon?
I think it all comes down that we rallied through the rise in rates because the economy was doing well. So it's all been about the economy, and ultimately, really, it's all been about AI. It's the AI adoption. The AI companies have driven this, right? We don't have a Mag 7. We've got a couple stocks really driving it. We've started to see a little bit more of a broadening out, but I'm concerned we're at kind of peak AI in this cycle, not in terms of adoption, but in terms of is it really delivering? I signed on to something yesterday, and they've changed my search to AI. I used to hit Control F and could find things easily. I couldn't figure out how to do it with the AI. I saw a toothbrush that now has AI. So everything's kind of put this AI label on stuff. And it feels a lot right now where we were at peak metaverse. I think AI is much more serious. It's going to last much longer. It's a real thing, but it doesn't mean we can't have peaked right now.
I love that, this idea of a malfunctioning toothbrush and with an AI label. There is this issue, though, that the leading economic indicators of the Conference Board have actually turned positive for the first time in something like 25, 26 months. This is unusual and typically a sign of strength. How do you fight signs of true economic strength with this idea that the market is somehow divorced and already priced for something else?
Well, I think leading economic indicators have had it wrong for quite a while. So they were showing declines. And to me, they're a little bit too tied to financial conditions, to equities. So when equities go up, it tends to drive that. So I'm looking much more what we're seeing in the job market. There, it's been a little bit less of a clear-cut story, right? It was a little bit more declines. So we'll learn a lot next week when we get job numbers and see how that's playing out. So the consumer, again, seems a little bit stretched. All of a sudden, we've gone through consumer credit was fine to it's back above trend. You're seeing delinquency still low, but now creeping back to more normal.
You said there's very little liquidity, and I want to challenge that because a lot of people have come on and talked about the wall of money and how there's just so much money that it's hard to bet against a momentum trade that has been really in some ways unprecedented. Where are you seeing a lack of liquidity at a time where this market seems flush with cash?
So what I look for is that intraday kind of trading liquidity, right? When you're having these very sharp and steep declines, and you look at how often, right, we gap up or we gap down, which tells me there's no true depth of liquidity. What we have, we've been referring to it as full liquidity, or this kind of shark and minnow liquidity, where it looks really active and you can trade a lot, but if someone big comes through with a trade, it immediately moves. So it strikes me that there just isn't a true depth of liquidity. Everyone's just kind of day trading around, which kind of fits with, we've seen the options trading has now outpaced stock trading. You've got the 0-day expiration. So to me, everything is much more a trading environment than a pure liquidity environment.
So what are you advocating for currently?
I want downside protection. I feel that we had the 3% move up, so we didn't quite get to the 5% last week. I feel that we're still much more susceptible to a very rapid 10% decline than another jump up. But definitely, unfortunately, kind of following suit with the trend, looking a little bit more to options. It's very difficult to trade this market, so you're looking at shorter dated options to try and express this view where you protect yourself against a large move.
I want to think about potential catalysts. Is that just the market falling on its own weight? What is the potential catalyst? Because at the moment, at least, for the first 3 months of this year, it hasn't been interest rates.
No, and I think my big concern is really it's going to be about China. And even yesterday, we had a bit of negative news when China was banning a couple of chips companies from selling chips into China. I think what we are going to see over the course of this year, and we've already seen some of it, is China is going to try and repress sales of Western brands into China so that they can bump up their own brands. We've seen that. Some of it's been kind of poo-pooed as, well, it's just China's economy slowing, so that's why they're not buying as many phones or computers or cars. I think it's much more of a pattern that we're seeing from China, and then you start looking at what they're trying to do in terms of selling their brands, not just domestically, but globally. I think France went after Shine, which is another company. Temu's out there. So I think that's going to be the real pressure, is it's going to force U.S. companies to, one, have fewer sales in China, possibly fewer sales in emerging markets, and maybe compete on price, which just isn't great for current valuations.
But made in China, does that resonate to other markets?
So we've been calling it made by China. So if you think, everything was always made by China, right? We took our products, had them manufactured in China, and then we sold them. Now China's trying to sell their own brands. And you would think, no, but you go Israel, I believe, BYD is the second most popular EV there. They're starting to sell that. Huawei is everywhere. So they've had some degree of success. And as you start looking at Shine and Temu, you realize at some level price matters.
Well, just taking a step back and sort of pulling this all together, there's a question of what the catalyst will be for some sort of reality check on markets. And it goes to this increasing division between the U.S. and China with this question of how much can the U.S. really look inward, create more industrialization within the country at a time where it's clearly lacking a lot of investment. How much spending capacity does the U.S. have before we start to see it reflected with higher bond yields?
One, I think that's coming, right? We go through the deficit. And then I think back to your question about this kind of ongoing friction, I would say where I get a little bit of disconnect when we talk to corporations, I think corporations are still trying to figure out, okay, how do we take advantage of selling into China? How do we work with China? And it's definitely nowhere close to what it was pre this. But when I talk to, Academy's got 18 retired generals and admirals who serve as our geopolitical intelligence group, when I'm talking to them, they're all about China right now. And if you just look at CISA put out something on living off the land in this Volt typhoon, which is supposedly critical infrastructure, but they're specifically targeting the People's Republic of China, the Communist Party. They're saying that. So I think DC, what's going on there is such heightened awareness of this friction and ongoing battle with China that it hasn't fed to corporations yet, but that will come out, I think.
How do you think that's going to come out? What do you think that looks like?
I think we get more and more tit-for-tat sort of policies where, well, you can't send your semiconductors here. Well, then you can't send them here. You can't do this. And I think that's the way we're headed. And at the same time, we're going to see more and more pressure, I think, from China on their, the countries that they have big trade deficits to push their brands. And I think that's going to be the weak spot, is emerging markets countries who've been selling a lot of commodities to China have these trade surpluses. I think that's the back door where China really starts aggressively selling their brands and has a great degree of success.
So last time around, and I know this is on Lisa's mind, last time around we did this, there were these warnings of runaway inflation. Didn't happen. Now I hear the same warnings again. Is it different this time?
Yeah, I'm not particularly concerned about runaway inflation. I think we've seen peak in goods inflation kind of was quick. It's slowing down on the services side. It was just a longer kind of COVID bump that's taking longer to play out. I think there's inflationary pressure. We've got some geopolitical risk out there. I think Iranian oil is, a potential target where that would cause oil to price up. I do think as we kind of do this reshoring, that's going to be inflationary.
Former president, 60% tariffs, gets a second term. What does it mean?
I think that fits with this whole battle. And I go back on this. I remember when the President Trump at the time put out the tariffs, a lot of economists were against that, said it was the worst thing ever, starting a trade war. Our position at the time had been that we'd been in a trade war for 20 years and just not fired a bullet. And ironically, not one of those tariffs has been taken off, and some additional things have been going on. So I think if you take away the bipartisanship or the partisanship and go to what's national security, at national security, both parties, I think, are now very fixated on China and very concerned about where they're headed technology and what they can do to us, and that's going to drive policy no matter who wins the election.
Pete, this was great. Just fantastic to break down some of these issues. Lisa, we've been talking about this for a number of months now. What's interesting is when you have this conversation with an equity strategist and you say to him, how vulnerable are multinationals? How difficult is life going to be? Kind of, no, everything's going to be, it'll be okay. They'll work through these issues. Keep going back to the same point. If that's the world they've got to live in, think about the world they have lived in for the last 20, 30 years. It's been uninterrupted globalization. They've been able to have progressive views at home in America. They've been able to entertain regressive views abroad in places like China and been able to sell products in both countries. Now you're having a cultural collision at home, not just abroad. Then you've got the extra issues of tariffs, etc. On top of that, China seems to be much more interested in domestic brands, and that patriotism that's come through the Chinese consumer is new in the last 10 years as well. I would say it's far more difficult now than it once was.
Which is interesting that today, or tomorrow rather, we're going to see the CEOs meet with Xi Jinping. How different is that conversation at this moment when it seems like that has to be on their radar? We saw yesterday AMD and Intel shares falling as a result of the potential restrictions of their use in Chinese government utilities.
Pete, I know you want a final word. Multinationals have had it their own way for a long, long time. It doesn't feel like that anymore.
No, and I would say two things. One, we're ignoring the fact that Huawei put out a phone that has a 7-nanometer chip, despite the fact they're not supposed to have 10 nanometers. No one seems to want to dig into that. Why? Because we don't want to find out what the answer is. That, to me, is a danger. And then the other side, the one thing I think corporations are talking about more and more, even before this tragic event today, is global shipping is no longer taken as a granted. I think when you are making business plans, you counted, okay, here's my shipping and here's a cost. And people are getting very concerned about global shipping. I think people are getting concerned about infrastructure. That's something that's going to have to be addressed. And again, I do think that pulls away from globalization and more to this reshoring, working with Mexico, working with South America.
Certainly learning that again this morning. Pete, good to see you. Peter Cheer of Academy Securities. On that note, let's get you the latest update out of Baltimore. Here's your Bloomberg Brief with Yahara Hackers. Hey, Yahara.
Hi, John. A massive search and rescue operation is underway in Baltimore after a container ship struck the key commuter bridge in the early hours of this morning. ABC News cites an unclassified cybersecurity and infrastructure security report saying the container ship Dolly lost propulsion as it was leaving the port and warned Maryland officials of a possible collision. Maersk issued a statement earlier saying the ship was under its charter. Emergency responders have rescued 2 people from the waters. 1 was seriously injured. The search continues for upwards of 7 people. Maryland's Governor Wes Moore has declared a state of emergency, and traffic has been suspended around the area, with motorists advised to avoid the I-695 interstate. Court movements have also been suspended. President Biden gaining ground in 6 of 7 key swing states this month, according to the latest Bloomberg Morning Consult poll. Biden seeing his biggest gains in Pennsylvania and Wisconsin, this following the president's State of the Union, which rallied Democrats and seemed to mitigate concerns about Biden's age. And Krispy Kreme shares are rising after McDonald's said it will begin selling their donuts in restaurants across America, marking the latest attempt by the burger chain to attract breakfast customers and all-day snackers. The chain said tests of customer appetites for the treats, quote, exceeded expectations. The donuts will be first available later this year, with a full rollout by the end of 2026. That's your Bloomberg Brief. John?
Yahara, thank you. Up next on the program, the latest on the tragic collapse of a major Baltimore bridge. That conversation up next.
What happened was you were offered a money-losing women's basketball team, and you said, I want to be in the other sports as well. Is that right?
Well, yeah, you know, you got to be smart about this.
Equities on the S&P 500 firmer here by 1/3%. A little bit of a lift, yield lower by a single basis point, 423.36. Under surveillance this morning, the search for survivors from that bridge collapse in Baltimore.
We are still very much in an active search and rescue posture at this point, and we will continue to be for some time. There were likely multiple people on the bridge at the time of the collapse, and that, as a result, multiple people were in the water. We may be looking for upwards of 7 individuals. That's the latest information we have.
It's the latest information now. Emergency services have rescued 2 people from the water, one with serious injuries. Governor Wes Moore has declared a state of emergency. Port and motor vehicle traffic has been suspended as rescue operations continue, with drivers advised to avoid the I-695 interstate. Bloomberg's Amy Morris joins us now from Washington. Amy, if we can talk about the latest, please, the search and rescue effort, just where are things currently?
I can tell you that the Port of Baltimore, the law enforcement officials, it's a multi-agency event that's going on right now, a mass casualty event. They are bringing in extra equipment from all over the state and from adjacent states to be able to find people under the water, to be able to find the cars that are under the water. They know there are more people under there. They're using everything from underwater vehicles to sonar to be able to try to locate these people. This is a port city. This is a port area. So they are prepared to go find people and to go rescue people who are underwater. Nothing could have prepared them for the collapse of the Key Bridge. This is a major part of an artery right through this part of the country. I mean, people who live in Washington, D.C. and drive to New York City, that's how they go. They take that bridge, and nothing could have prepared them for this.
Amy, it's going to take some time to establish a very clear picture of what happened here and just what went wrong. There'll be a series of investigations, I'm sure. They could be drawn out. But I think we've put together just a few pieces in the last hour or so as to what happened. Amy, what have we learned?
What we have learned is that the ship, which was licensed by Maersk and under the Singapore flag, had said that it was going through a loss of power, that it was going through some sort of trauma on the ship. You can see the black smoke billowing from it. And the video that you may have already seen of the ship hitting the part of the bridge where it collapsed, all the power was going out. You could see the lights going on and off. It was a mess. They were unable to steer the ship. And so they sent out that mayday, they sent out that call, and that's when they hit the bridge. Now, what remains to be seen is why the bridge collapsed the way it did. Instead of just one part of the bridge falling into the water, the bridge fell in a sequence of events. It was almost like a domino effect falling into the water. The bridge is lost. I mean, there are parts of it that are still sticking up, but they are calling this a total collapse of this bridge. That needs to be investigated as well.
In the meantime, Amy, can you give us a sense of where people are going to be rerouted? You said this is a major artery for everyone who lives in D.C. and in the entire region going from D.C. to New York. What does that mean for congestion there? And what does this mean for congestion at the port that is one of the biggest in the East Coast?
Well, there are detours that are in place. There are tunnels through Baltimore that people can take. However, those tunnels do not allow tractor trailers that are carrying hazardous materials. So all of those trucks will have to be inspected before they can enter the tunnels. That's an option, but it's a very congested option, and it's also going to involve all of these inspections and law enforcement there. So it's going to be very, very, very slow. There are maps already online for where people can follow to try to find their way around this collapsed bridge, going way out west of Baltimore to try to get around it. Most people, if they're having to commute because of work, they might be better off just working from home. We all know that we can do that in most cases, but this is causing a tremendous mess. People are being advised just to stay put until they can figure out a better routes for people.
Amy, can you tell us a little bit about what kind of federal and state response we'll see? Who's actually going to be working on the ground?
We already know that the FBI is on the ground there. And let me clarify something. There is absolutely no indication that this was intentional, that there was any malintent, that this is terrorism. That was one of the first questions that was asked. No, there's no indication of that. Still, the FBI is there because this is their gig. This is what they do. So the FBI is there. We've got state, local, and federal law enforcement, the Department of Transportation, Secretary Pete Buttigieg already been informed, already getting as much information as he can. His office is helping as well. You've got Coast Guard, you've got sonar and radar and eyes in the skies, if you will. Everybody is actually all hands on deck for this, because this is something that our area has really never seen before. It is highly unusual to have a landmark like the Key Bridge in Baltimore just disappear.
Amy, you raised this question. I think it's worth exploring without going too deep into the realm of speculation. To see a collision like that in these pictures lead to a catastrophic collapse of the whole bridge almost immediately will naturally raise questions about the safety of some of these bridges across this country. Now, we can maybe put this particular incident to one side and allow the investigators to do their job. But as you look across the country right now, how big of an issue is that?
Isn't it an enormous issue? That was the first thing that most people asked about was, wow, if this bridge can fall just from this collision, what about the bridges that I take every day to work? Infrastructure has been an issue with the Biden administration from day one, and the money that's been poured into infrastructure has not stopped. It is still coming through. However, this is something that they're going to be investigating. The mayor has already said, and the fire chief has already said in Baltimore, that they have reached out to several engineering companies to come and look and inspect and see where the flaws may have been that would have allowed something as catastrophic as this to have happened. And that is a question that still needs to be answered. But the investigation is ongoing. The priority, however, of course, is the safety.
Amy, thank you for the update and the search and rescue effort ongoing. Amy Morris there in Washington on the latest. Naturally, there's going to be tons of questions, Lisa, one of which would be, when there was a loss of propulsion, how much time was there between then and the collision? How much time would they have had to shut the bridge down and make sure there was no vehicles on there?
And whether this ship was inspected before a 27-day journey to Sri Lanka, and then what other bridges were constructed by the same construction company and architect, potentially?
Yeah, it's going to take time for that investigation to come together. The focus, of course, from officials at the moment is on the search and rescue effort. Equity futures on the S&P 500 positive here by a third of 1%. Up next on the program, a sprinkle of economic data and reaction from Andrew Holmhorst of Citi.
You formed a partnership with Penny Pritzker at some point to do parking, is that right?
Yeah, so when I was working at JLL, that we went through this real estate recession in the early 90s, and the senior people at the firm said, let's do a retrospective on all these different asset classes to see what happened, how we overpaid, why we ran into so much trouble, what really happened in the marketplace. And when I did that, I recognized, wow, there were a lot of reasons why I liked the parking assets better than I did office and retail and industrial. And so I started really noodling on the differences between those asset classes and came up with a rationale to start a business in the parking space. Then I crossed paths with Penny Pritzker, who later became our Secretary of Commerce. And she liked the idea, and she and I went off on this adventure together and built a real estate operating company in the parking space.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Mike McKee around the table. Some economic data due in about 20 seconds' time. Going into it, the scores look like this. Equity futures are positive by 1/3 of 1% on the S&P. On the Nasdaq, up 1/2 of 1%. Outperformance on a Russell on the small caps. In the bond market, 2-year yield looks a little something like this. 459.10. Yields lower by 3 basis points. On a 10-year, down a single basis point to 423.16. With your economic data, let's get to Mike McKee. Good morning, Mike.
Good morning. Well, we have durable goods orders out this morning, and normally they are something that would give us a clue about business spending, but they do get heavily revised, and Boeing has affected them a lot. The headline number comes in up 1.4%. The ex-transportation up 0.5%. So there's certainly some sort of Boeing connection there that we'll have to look at. The capital goods orders, non-defense ex-air, a strong 0.7% gain after a flat reading last month. Now, capital goods non-defense ex-air is kind of the proxy for business spending that goes into GDP, and shipments were down 0.4. So that's something that would, this is for the month of February, that would subtract probably or suggest subtraction from GDP. I'll take a look while you guys are checking the markets. I will take a look at what it is that moved this and see how much Boeing might have had an influence on the overall number.
We can run through the 3 boards, and let's start with equities on the S&P 500. Still basically trading where we were, up 1/3 of 1% on the S&P, likewise on the Nasdaq. In the bond market, let's take a look at the front end of the yield curve. The 2-year yield still a little bit lower on a session at the front end. We're down by 3 basis points. On this screen, on a 10-year, we're down by about a basis point to 423.56. Raising some questions, Lisa, about just how many cuts we should be pricing out right now, given how strong this data is.
Well, this has been the continual question, which is if you have a robust economy that's showing signs of green shoots, we heard Matt Kettner saying early cycle, are we really talking about rate cuts? At the same time, a real question here about inflation, and is this inflationary, especially given that some of this is just delayed spending?
Mike, second read on things, what is it?
Well, it looks like there was a significant Boeing effect. Now, Boeing sold 15 airplanes in February, but that was 12 more than the month before. So non-defense aircraft up by 24% in this reading, 24.6%. So a significant boost from that. Also, we saw a big turnaround in autos, transportation equipment up. The motor vehicles are up 1.8%, new orders and shipments up 1.5%. I bring that up because the Port of Baltimore is a place where most of the East Coast imports of autos come through that port. So this could be something that gets interrupted significantly.
You know, just to sort of follow on and to rip up the script, as Tom Keene would say, how much would greater investment in infrastructure and greater investment in trying to shore up some of these areas that are likely going to get disrupted potentially for a temporary period of time or even longer, how much is that inflationary?
It depends on how it's spent and over what period. It's probably not significantly inflationary. Brookings Institution does a fiscal policy monitor, and they calculate how much additional fiscal help is going into the economy. And right now, they're saying that it's actually negative. The fiscal spend is negative for this year so far and for last year. So we've really dropped off from what we were doing before. But the money is being spent over a longer period of time, and that's where the benefits will come over a longer period of time, that eventually it will be disinflationary if they get this all done.
So basically we were having 2 Big Mac meals, we're just having 1, but we're not on a diet, are we?
Yeah.
I mean, that's the way I'd summarize things in DC. We're comparing things to pretty extreme deficits, aren't we?
Well, this is going to be an interesting situation because the location of this bridge and the situation that we're going to be in terms of transporting stuff will push Congress, I think, to do some emergency funding for this bridge. We were talking just before the show about how bridges have fallen in recent years, Minneapolis, Philadelphia, and the Bay Bridge after the earthquake, and they get rebuilt much more quickly than they were built in the first place. It took 5 years to build the Francis Scott Key Bridge, and hopefully they can get some kind of replacement going much more quickly than that if Congress will throw some money at it.
It could be a lot of disruption in between. Mike McKee, thank you, sir. Breaking down the data. More upside surprises in America. Let's get to the chief U.S. economist, Andrew Hoddenhorst, to break down some of this. Andrew, you were listening to Mike McKee's breakdown of the data. Your first reaction to it, please.
Yeah, I mean, I think like Mike, I would emphasize that these numbers have really been bounced around by aircraft, by autos. You want to kind of look at the core of it, and what are we seeing at the core is weak, not too exciting, not too positive on the shipment side. We saw that this morning again. I think if you look at the various manufacturing diffusion indices, they've bottomed, they've come off of the bottom, but they're still sitting close to contractionary territory or in contractionary territory. So I don't think we're really changing the narrative around CapEx here.
We're all super familiar with your research. One theme that's come up throughout this year, and I keep seeing it in every single note that you send out, this economy is going to slow down by such an amount that this Federal Reserve is going to need to cut interest rates. You're still thinking about end-of-cycle type stuff, dynamics that are going to become more apparent and obvious through the year. What's leading to that conclusion for you?
It's really the labor market. It's really what we're seeing in the labor market, where you're seeing things like hours worked that are coming down, a hiring rate that's coming down. I think that's why we heard Chair Powell saying in his evaluation of the data, it's not that we're weakening yet, and I would agree with that, but the labor market is his emphasis in terms of a point of concern. It would be mine also.
So do you think that at this point he had the right message, the market's gotten it, and it's only us that's kind of trying to understand and freak out around it?
Yeah, I mean, I think one thing that was probably constructive that Chair Powell tried to do and that the committee is trying to do is to get away from responding to each individual data point as it comes in. That's a very difficult way to set policy. They're kind of trying to tell us that we're on a path to get to rate cuts now. Inflation has come down enough that they think that they can be cutting interest rates. Now, it's not at all clear that inflation's returned to 2%. With some of these supply-side disruptions, it's a good reminder of why there's still upside risk to inflation.
Let's sit on that for a minute, because really this is really dominating my thoughts right now is the Baltimore Bridge and what that means for infrastructure spending, what that means for some of the importance right now of getting more spending passed rather than less at a time with the deficit, as John rightly said, is like having 15 Big Macs. So at what point do you see this as an inflationary type of impulse where the U.S. has to keep borrowing, to keep investing, to prop up certain industries at the expense potentially of bond yields and inflation?
Yeah, this comes back to the idea of fiscal space, right? We usually don't really worry too much about fiscal space in the U.S. because politically there always seems to be more space to do more spending. But when you've already done a lot of spending, when you've already put a lot of stimulus into the economy, then when you have real shocks to the economy, clearly no one would disagree that we should be rebuilding this bridge, that we should be investing in infrastructure. But that spending, to John's point, is going to come on top of a large deficit that we're already running. So I think that's where you really get into difficulties, potentially politically, but also economically. Is that also increasing price pressures in the short term? In the long term, investing in infrastructure is going to be deflationary, positive for productivity. But in the short term, you need to hire people. You need to source materials and inputs, and that puts upward pressure on prices.
Public debt situation most urgent I can ever remember is from Larry Fink this morning. What do you think this does in terms of the impact of the dollar?
Yeah, I think that is something that's increasingly in focus. I think we saw a bit of that last year. We saw it maybe less in currencies. We saw it more in treasury yields, where you had the 10-year yield that was upwards of 5%. And I think that was some foreign investor concern that is this a country that is going to run sustainable deficits? They certainly do not look sustainable right now. That's ultimately an issue for the currency also.
I want to build on Lisa's line of questioning around this port in Baltimore and what could develop in the East Coast in the weeks and months to come. Can you help us understand, just frame briefly, how strong the tailwinds are, the disinflationary tailwinds in goods at the moment in America? Because there was some sign in the last few months that maybe that's fading, and I just wonder how vulnerable we are to maybe a re-acceleration in goods prices off the back of a development like this one this morning.
Yeah, I think it's a really important thing to draw attention to, because a lot of the disinflation that we've had has been that goods price disinflation, and that was energy prices coming down. That was supply constraints that had been constraining supply and boosting prices that were relaxing. look at where we are now. We have gasoline prices that are rising, that are projected to rise further into the summer. We now have this supply side disruption related to the port in Baltimore that would also indicate that, if anything, goods prices could be higher. We already know about the Panama Canal. We know about the Red Sea and the Suez Canal. And we saw in the last inflation report, to your point, core goods prices came up. They've been coming down. They came up in the last report. It doesn't mean they're going to come up in every report, but this period of deflation in goods that we've been in for the last 6 months or so, we're probably coming out of that now.
Do you think services can do the heavy lifting as that develops on the goods side?
So I think that's what you need to have happen to bring inflation down. So in some ways, this kind of idea that the labor market is softening, you really need to see that continue to bring inflation overall down, which is a very unfortunate scenario. We'd like to have a strong labor market, and we'd like to have inflation come down. There's a reason it hasn't happened historically. If goods are going to be less disinflationary, less deflationary, then services need to pick up for that, and that has to be through a softer labor market.
What I hear from you is different to what I heard from the chairman. Is that fair?
I think that's fair.
So basically you're saying to get inflation back to target, we need a recession.
That's still the most likely way you bring inflation back to target. Is there some probability that you get a true soft landing? Sure, there's some probability. But I think what we're seeing is just consistent with the idea that wage growth has kind of stalled out around 4 to 5% by various different measures. If you want wage growth to decelerate further, the labor market probably needs to soften from here.
Do disruptions like what we're going to see inevitably, either on a very small term or potentially medium term, with respect to the Baltimore Bridge and shipping passages, we've seen shipping disrupted in general. Does that make it more or less likely that we'll get the recession that you're talking about to bring inflation under control?
No, so the worst thing that can happen for the economy, the worst thing that can happen for the Fed are these kind of supply side shocks, because what they do is they reduce the productive capacity of the U.S. economy and they boost inflation at the same time. So it's negative for growth, and it means you get higher inflation. It's different than a demand shock where you get stronger growth and you get higher inflation. That's kind of been where we've been.
But this goes to something that John was talking about. If we get that kind of stagflationary shock, which is essentially what you're describing, are the Fed's hands tied, or have they made it clear that they're going to err on the side of supporting the economy and the labor market over continuing the fight for inflation?
I think they're in a transition here, but what they're transitioning to is this increased emphasis on the labor market, on the economy. The idea, which we saw in their summary of economic projections, inflation can run closer to 3% than 2%, and they still plan to cut rates. That's what they have in their projections now. If that number sneaks up a little bit higher on core inflation at the end of this year, and I suspect it will over the course of the year, I think they'll still be cutting.
There's some debate this morning about whether the Federal Reserve is basically saying they've got a higher tolerance for inflation. I'd love your response to that. We caught it with Barclays earlier this morning, who kind of pushed back against that view. Others have endorsed it. Mohamed El-Erian said this could be the beginning of a long story, but the beginning of a story that suggests this Fed is now targeting a range and not a point target. Can I get your view on that?
Yeah, I think implicitly that's true. Explicitly, are we going to hear Fed officials come out and say, you know what, we've gotten comfortable being away from target to the upside? I don't think we're going to hear that in the near term. But this idea that they can accept somewhat stronger inflation, I think everybody would basically say, yeah, 2.5% inflation, that's close enough to 2% inflation. Now, the problem that you get to is, well, is 3% close enough to 2.5%? Is 4% close enough to 3%? And we're kind of in that region now. I think it is a transition, though, where they're moving more towards this kind of labor market concern, economy concern, and the reality is that they will accept higher inflation.
The issue with that, and you know it well, once you begin to give signs, even if you don't say it explicitly, doesn't that make it harder to get back down even more?
Yeah, absolutely. This can easily lock us into, not just a short period, but really a new regime where inflation is higher, more elevated, and more volatile.
This is what Jim Bianco of Bianco Research was talking about yesterday. In fact, I'd go back almost a full 12 months. Richard Clarida, in a secular outlook for PIMCO, coming out and saying this Fed's going to accept 2 point something, which sounded controversial at the time, and it's almost consensus now on Wall Street.
And it's led to this incredible euphoria that people are pointing to in markets, because you're basically having the Fed that's got your back and you can eat your cake and have it too. What is the consequence of that? Is it inflation that's not 2 point something, but that's 3 point something, to Andrew's point? And then at what point does the Fed have to say, basta, enough. Like, we gotta actually do something and hold rates higher.
Need to put an Italian on that FOMC, don't we? Andrew, thank you. Andrew Hornhorst of Citi. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahara Hackers. Hey, Yahara.
Hi, John. As we've been reporting throughout the morning, a massive search and rescue operation is underway in Baltimore following the collapse of the Francis Scott Key commuter bridge. ABC News reports the container ship Dolly lost propulsion and control, warning Maryland officials of a possible collision. Maersk issued a statement saying the ship was under its charter. Emergency services say 2 people have been rescued from the water. 1 was in a serious condition. They're searching for upwards of 7 others using sonar, infrared, and divers. Traffic in the port and surrounding area remains suspended. A Bloomberg News investigation has found examples of a growing black market for SpaceX's Starlink internet terminals. The access points have been popping up in territories ruled by repressive regimes, including Iran, Sudan, and Yemen, while Ukraine has accused Russian forces of also using the services. Elon Musk says the company isn't knowingly providing the terminals to any of these countries. Former President Donald Trump's social media company is rising ahead of its first session as a publicly listed company. Trump Media and Technology Group will begin trading today on the NASDAQ under the ticker DJT following its merger with a so-called blank check company, or SPAC. The deal gives the parent company of Trump's social media platform, Truth Social, more than $275 million of much-needed capital, plus providing a windfall for Trump as he faces mounting legal and financial issues. That's your Bloomberg Brief. John?
Yahara, thank you. Up next on this program, Boeing's C-suite overhaul.
We're going to approach this, number one, acknowledging our mistake. We fly safe planes. We don't put airplanes in the air that we don't have 100% confidence in.
That conversation up next.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal.
The Deal. That deal. The Deal.
Huge deal.
Who dug this up? One of y'all's in trouble.
Wow.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
This is Bloomberg.
The opening bow, 43 minutes away. Equity futures positive by 0.25%. Once again, the data in America pretty decent. Upside surprise. Yields higher now by a single basis point on the 10-year, 425.53. Under surveillance this morning, Boeing's C-suite overhaul.
I didn't know what happened to who.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
Well, I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Reliability, safety has always been table stakes in the manufacturing of airplanes. So no airline ever wants to have an accident, and for the most part, U.S. aviation has built an extraordinary safety record. And so when you're looking at Airbus and Boeing as to purchasing airplanes, what you try to do is you try to find the best quality, the best price, the best operating costs. And when possible, you buy, if you're a big enough airline so that you can tolerate the costs of operating multiple fleets, you try to use the competition between those two manufacturers to sustain your own cost per aircraft or cost per available seat mile, and by competing them against one another. And that's what everybody wants. But table stakes, as I say, safety at table stakes. So without an absolute reputation for safety and consistency, you simply can't compete. And that's why everybody's worried about Boeing. We've got to get Boeing back to the point where it produces an impeccable product.
Bob, it's not just Boeing, though. We're also hearing about more small incidents and medium-sized ones at airports and questions about air traffic controllers and a lack of staff. Is this all just because of the pandemic? Is it just that we're hearing about these things and didn't used to? Or is it lack of infrastructure investment? Can you identify why we're hearing more about the bread and butter of the industry being challenged, which is safety?
Well, I think we're hearing a lot more of that for several reasons. One of them is the Congress's failure to raise taxes enough so that the U.S. government has enough money to do the job properly. We have been underinvesting in our air traffic control system. We have been underinvesting in our roads and bridges. And until we step up and fix that problem, I think we're going to continue to have the kind of problems to which you refer. And certainly air traffic control systems. We used to be the leader in the world. We are falling behind what the Europeans are doing, what people in other parts of the world are doing, and we need to fix that. And in order to fix it, we need to provide appropriate resources.
All right, so to fix that and to try to mitigate some of these trust issues the American public has with Boeing right now, as well as airline CEOs, do they need to look outside the company given the crisis of culture that's been developing within Boeing?
Well, look, I don't know what's gone wrong with Boeing, and I suspect Dave Calhoun doesn't either. in the statement that he said, we're gonna look very carefully at this, and we're gonna learn from our mistakes. I don't know explicitly what those mistakes were. Was it a mistake to acquire Douglas a decade and a half ago? Maybe so. Was it a mistake to lay off as many engineers as they did in the COVID years? Maybe so. Has it been a mistake to outsource some of the work away from their own workforce? Maybe so. I don't know the answers to those things. And Dave Calhoun, up to this point, hasn't made clear that he knows the answers either. But we need to fix that. And to fix it, we've got to reinstate the culture of quality so that every man, every woman turning a wrench, building an airplane, doing a piece of wiring on an airplane, everybody feels that sense of personal responsibility, which will make that airplane come out of the manufacturing facility in perfect condition.
Bob, let's finish on a lighter note. Speaking of responsibility, you are responsible for the frequent flying program that was introduced at American Airlines. You revolutionized the industry. I just want your opinion on things, on where we are now. Did you ever think we'd be where we are now? Did you ever think, and my colleague Lisa talks about this a lot, that ultimately airlines would turn into credit card companies? Bob, did you ever see that happening?
To be honest, when we invented it, we thought it was a good idea. But I quite, in all honesty, I never anticipated that it would be as great a success as it has been. And of course, we're very pleased by that.
I have a complaint. Don't you think you should get miles to be rewarded for flying, not for spending money on other things? Don't you agree with that, Bob?
No, I don't think I agree with that. I think it's a good thing that you can buy lots of things with miles.
Of course he's not going to agree with that.
As a consequence of that mileage business is a good business.
Bob, I'm going to let you go, but I do want to know how you get concierge key, so you can tell me in the next commercial break, okay? Just not on air. Bob, thank you, sir. Bob Crandall there, the former American Airlines CEO. Legend.
He wasn't going to answer that question with anything that you wanted, because it's basically giving them all the money to do what they need to do.
Inquiring minds who fly American want to know, how do you get concierge key?
Yeah. You think he's going to tell you?
I just want to know.
How
many miles does it?
Just give you the key.
Or maybe you just go around spending lots of money on a credit card. I've got no idea.
Go crush it.
Coming up tomorrow, Bruce Katzman of JP Morgan, Katie Nixon of Northern Trust.
Welcome back to another Miami Open update for Bloomberg TV and radio from Tennis Channel. Fourth seed Alexander Zverev came through his rain-interrupted third-round match against Chris Eubanks to move on to the round of 16. The German handled the American's big serving game and got the decisive break early in the second set before putting the comfortable win in the books. He'll face Karen Khachanov for a spot in the quarters. And don't forget, Tennis Channel's daily live coverage starts at 11 a.m. Eastern.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
So many people say the only way to really deal with climate change is kind of eliminate oil and gas and then have more clean energy. Is it realistic to eliminate oil and gas in the foreseeable future?
You actually have to at least mitigate it. I think you have to bring a lot of it down and replace a lot of it, but you can also have a huge impact by trying to do things like carbon capture and so forth, right, and around it. And it's going to take both approaches. Even today, greater than 80+% of the way the world operates around energy right now is still fossil fuels, when you kind of look at it. And probably what's more striking is the fact that the demand for it is going up every year.
Things like solar or wind, it's nice and environmentally friendly, but really it's not going to produce enough energy to really replace oil and gas in my lifetime, I assume, right?
Well, not by itself. So let me just say, solar and wind are critical components. This is going to be sort of a collective effort with a lot of different technologies that are each going to come in and take their piece. What we do at Breakthrough, we look at technologies that could produce remove half a gigaton of carbon a year. And the way to think about that number is that we have to remove, say, 100 half a gigatons, a year in terms of what we have to replace.
You're a famous photographer, you're a conservationist, you're an activist. How would you define yourself?
I think I'm just a human trying to figure out how to be a better steward of our little planet. I am a biochemical engineer by training. I studied marine biology, fisheries, aquaculture, and then I realized that the ocean is very much out of sight and it needs help. And so I became a photographer to be able to communicate with a larger audience. And thank goodness I was good at it.
When did you realize that actually photography was your passion and you could make a real difference to our world?
I didn't start out as being a photographer, so it was not until 1990-something, 96, when I picked up a camera, and I became a professional photographer soon after. And it's one of those things that it's like learning another language. You learn a few words, and then you put a few sentences together, and one day, you might be able to write poetry.
From New York City, for our viewers worldwide, a very good morning. I'm Manus Craney in for Jonathan Farrow. And breathe, everybody. The melt-up is back on. Tesla is bid. Have the Italians reached out for a Cybertruck? We will debate this rolling rally, month 5, if we can close out. Countdown to the open kicks in right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Coming up, edging higher, futures trade up, they digest the latest data and Fed speak. President Biden gaining ground and Donald Trump in the key blue wall states. And disruption on the East Coast after a Baltimore bridge collapses. We begin with the big issue. Have we reached irrational exuberance?
We are seeing signs of, the wall of worry having been completely dissolved. Very aberrant behavior in the options markets, betting on stocks doubling in the course of 3 or 4 days, incredible. Betting on the NASDAQ rallying a further 33% out to June after already rallying 30% since the October low. All of these things say that there is a feeling that the market is invincible.
Invincibility, a beautiful thought. Now, Invesco's Brian Levitt writes this morning. I had spent much of my career imploring investors to manage their emotions. I, as much as anyone, knew that breaking from investment plans at inopportune times had typically cost investors dearly. Brian Levitt joins us now alongside Nuveen's Anders Pearson. Now, Brian, of course, what you've got to put this context in, this was when a market was tumbling out of bed. You were exceptionally cautious and worried, and you were so close to pressing the sell button. Here we are in a euphoric market. It's rising, it's rising. There's weaponized FOMO. What does your emotion tell you right now about market participation for you?
Well, my emotion tells me that, and my views tell me that peak inflation, peak tightening, peak interest rates tend to be good for stocks over the subsequent years. So if you're looking at near-term indicators of sentiment, it may suggest that things are a little bit too bullish or a little bit too optimistic in the short term. And look, markets always tend to have some pullbacks in a given year, but I still come back to that principle that inflation's beyond us. It's peaked months ago. The Federal Reserve is going to be easing and normalizing the yield curve. And over the subsequent years, that tends to be a good backdrop for equities and credit.
Okay, it has peaked, but it is sticky. Anders, good morning. Some people say there's an irrationality in credit. What do you say?
I would pretty much echo what Brian said. I think it's similar trends on the credit side that we're seeing on the equity side, that momentum is holding up very well, and for mostly good reasons. Fundamentals are holding up quite well. I think we're finding a lot of investors are looking at the credit markets and look at yields that are very attractive. If you look at investment grade at over 5%, high yield close to 8, senior loans around 9 or higher in many respects, those are attractive income levels. And while we can argue that spreads on the credit side have become a little bit more on that fully valued range, at the same time, your momentum continues to be behind us. So from that perspective, we could see that continue for a bit longer.
Okay, well, we'll dig into the premium if 8% is enough over cash at 5.25%, and maybe even the risk of no cuts. But there's a combination that we can discuss. Let's talk about the Fed speak this week, because the latest from the Fed Governor, Lisa Cook.
The risks to achieving our inflation and employment goals are moving into better balance. The risk of easing monetary policy too soon or too much is that it could allow above target inflation to become entrenched and halt the progress that we have seen.
A note of caution from Ms. Cook. Bloomberg's Mike McKee is with me. Bostic and Cook yesterday took a little bit of heat out of the equity market in the first instance, Mike, but give us your take.
Well, we got a little bit back today, Madison. It's because we're all data dependent at this point, including the Fed. Durable goods orders came in stronger than expected, up 1.4%. Capital goods, non-defense ex-air, that's the proxy for business spending, goes into GDP, also much stronger than anticipated, but then shipments were down. So what is it telling us about business spending and the economy? It's a little bit of a mixed message. The one reason that we saw such a big gain in durable goods, by the way, was Boeing. They rebounded a little bit in February, selling 15 aircraft. And look at, that's Boeing. That's the Boeing effect there. And you can see how volatile it is when the Boeing orders come in and out. So that's why Wall Street doesn't pay a whole lot of attention to the headline. But in general, a little bit of strength, which means the Fed has to decide what it's going to do. And as you pointed out, there is a difference now, a split on the Fed. We'll see if it closes as they get closer to their May meeting. But yesterday, we saw Raphael Bostic of Atlanta reiterate the one cut this year theme he sounded on Friday, followed by Austin Goolsbee from Chicago saying he thinks 3 cuts are probably the most likely thing. And then Lisa Cook coming down in the middle saying we just need to be cautious. She didn't take a side one way or the other. But it does look like at this point the Fed is confused as everybody else about the economy and where it's going. Fortunately, they don't have to trade day to day.
No, well, there's a trifecta there, isn't there? You can take whatever portion of the dinner menu you want there. Mike, thank you very much, Mike McKee on Fed Speak. My guests this morning are Anders Pearson, Brian Levitt. Anders, to you first of all. I mean, there is a non-inconsiderable amount of dots at 2 cuts, and Bostic voicing 1 cut, but you're dug in at 3. Why?
Yeah, I think our base case is that we're going to have 3 cuts this year, and certainly, you know, our take is that particularly Powell is quite keen to get going at some point. Our view is that it's going to be this summer, you know, data dependent, of course, if it's a June or July kind of type time frame. But our view is, again, that Powell is quite itching to kind of rip the Band-Aid off and get going, and for now, 3 cuts seems like the most natural kind of type approach here to keep the balance going. And I think investors get a little bit carried away around how quickly it will happen, what have you. We could see them taking a pause at some point as well. But at the same time, we do expect a summer time frame is the natural first step from a cutting perspective.
Brian, if we talk about the triggers for pause, we've yet to see anything really cause a pause. You know, 500 basis points in hikes. It's a strong growth economy. Employment is sub 4%. All of the bricks are there of a very strong, robust U.S. exceptionalism. It's trading at 23 times earnings or thereabouts at the moment. How much more road have we got to travel?
Well, I want to make 2 points. The first is around this idea of cuts. It's almost as if we worry if there's only 1 cut that's going to be a major challenge for the market. The reality is that just means we have a relatively strong economic backdrop, which should be good for earnings. So the denominator in the valuations that you speak about. Now, with regards to the multiples on the S&P 500, they are a bit elevated compared to history. A lot of that tends to be concentrated average S&P 500 company or the other 490 names, they generally trading in line with long-term averages. And if you consider the earnings yield on the broad market and compare it to a 10-year Treasury rate, it's pretty much at par. So it's pretty much equal. So it suggests that stocks are neither expensive nor cheap to bonds. So I wouldn't be overly concerned about valuations. They've never been a good timing tool anyway. And again, back to that point, the average S&P 500 stock is not particularly overvalued.
And there's one piece that came to my attention this morning is Larry Fink, and this I hear what you say, which is I can get 8%, I can get 5% on investment grade, 8% over on high yield. But Larry Fink really grasped the zeitgeist this morning in a note. He said, "This is about debt. It is more urgent than I can ever remember. More leaders should pay attention to America's snowballing debt scenario." A bad scenario akin to Japan in the 1990s is something that could evolve. It's a very, very serious series of warnings about what could happen. Now, he says we're not in a debt crisis. Is a debt crisis inevitable? No, but at some juncture, sovereign markets of the United States of America will face an incredible headwind. Does that come into your thinking at all?
Yeah, and I think we had some comments from the CBO side as well, kind of looking into where things could be going forward. So yeah, no, I mean, certainly we debate that quite a bit on our team, and we get questions from clients all the time around this. You know, for now, I would say that we're looking at sort of where we're sitting here today, and partly from a treasury issuance that should be quite balanced in the coming months. There was a lot of discussions around that, and without potentially would do the rates as we were sitting here come back in November. You know, they're basically been using bills primarily, and until April, we're going to get the tax receipts coming in, and then probably get steady auctions for the rest of the year. So as I'm looking here, you know, for 2024, it's probably going to be a fairly stable environment, and it's really more probably a 2025 and beyond kind of type issue. So certainly not ignoring it, but I think for now, you know, the markets are going to be more focused on kind of having stable auctions, successful auctions. We just saw the 20-year auction being very successful, and really focusing probably more on the elections and what kind of happens on that front. Because let's not forget that will have an impact on where we take the debt levels going forward as well. That number could be meaningfully larger if you have a sweep on one side or another. So for now, I think the market's going to be probably focused a little bit more, you know, kind of Fed cuts, hot economy, inflation, what have you. But certainly as we're thinking 2025 and beyond, that is an area that we're going to have to start, you know, basically counting in a little bit more.
Brian, can we just round off with you? I've had a number of people talk to me about cyclicality and what that means. At SocGen yesterday, upgrading their financials for the first time since 2021. Briefly, what is cyclicality? You favor it. How do you make it come alive?
Yeah, the cyclicality would come into play typically around a Fed easing cycle and the normalization of the yield curve, and a catalyst for broader economic activity into hopefully even an expansion. And so in that type of environment, you want to favor energy, financials, industrials, and you're starting to see that work a bit. You have seen some broadening out of this market, which is a good sign, and is likely in anticipation of this easing cycle that we will get over the next year and a half.
Okay, Anders, thank you so much. Brian, thank you for being with me. Brian Levitt and Anders. A quick snapshot of what's going on in markets this morning. You have 10-year government bond yields ticking up ever so slightly. A little bit more coming to auction today, 5s and 7s. And of course, PIMCO, they have a smaller exposure to US Treasuries than they do perhaps to the UK and Canada. Euro-dollar, that's the euro up by 0.2%. And gold trades up 0.9%, trading through record highs ahead of the PCE on Friday. Let's look under the hood of the stocks ahead of the opening bell. Abigail Doolittle is with me.
Well, Manus, overall, we do have the index futures up just slightly, but one stock that's weighing, heading to a second down day in a row, that is Apple. And this, of course, on the report that China iPhone shipments fell 33% in February. This is very consistent with a report that we had earlier this month, I should say, that the iPhone maker saw a 24% plunge in iPhones in the first 6 weeks of the year. This stock now down 15% from its December peak, so truly in a correction. Tesla, on the other hand, up 3.3% it seems to be that it has to do with Italy contacting Tesla, the country's industry ministry reaching out to the company about potential production of electric trucks, that Cybertruck. And then finally, the big winner, Viking Therapeutics, up about 16%. They put up good early study results for their weight loss pills. The street's very pleased. Truist is saying that the data is strong, the study was strong, the stock should be strong on this. Indeed it is. Plus, there is a 12% short interest, so some of those bears running for cover.
Abby, thank you so much. Abigail Doolittle there with the latest moves on the market. Coming up, I take you to a live shot of the Francis Scott Bridge in Baltimore, which has collapsed after being struck by that container ship. We're waiting the news conference that will begin at 9:30 a.m. Now, this is the Francis Scott Bridge. As I say, the FAA are restricting drone flights near this major commuter bridge. You're looking at the price of AP Mullen-Maersk, which is the ship that you're looking at there is indeed chartered by Maersk. We'll have more details on this tragedy through the morning. The news conference at 9:30 and a T Live with all the details is available on your Bloomberg terminal.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd put everything I had into it.
I get asked more about our relationship than I do my wife. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal.
The Deal. That deal. The Deal.
Huge deal.
Who dug this up? What are y'all in trouble?
My general advice is continue to seek out companies or people that are maybe 1 stage or 2 stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down the path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to like build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
When I was younger, I used to be in bands. I'd play drums in bands and toured America with them, did a lot of session drumming, recorded albums. So yeah, it was good fun doing the drumming. The only reason I stopped it, well, I still play, but not as serious as I did when I was younger, but drumming doesn't pay the bills. I was never good enough to be able to pay the bills with it, but it was good fun. I started RJF, and the reason I started it was I saw a gap in the market for particular early stage and startup businesses. With the experience that I've got of running businesses, of being a finance director at the very biggest companies in the world to being finance director of small startups, we were looking at providing more than just basic accountancy services. So yes, we'll do all that, we'll do all the basic, all the statutory side of things that you need to do. But there's so much more value that we can add, and I wanted to have my experience to help these startups, because a lot of them don't really know where to go. You can go to your high street accountants and they can do a good job compliance-wise, but you would question whether they've actually been in the firing line of a business. Have you been in a business where you're thinking, how do I pay wages next week? Or business is really successful, what do we do with it next? Or how do we grow it? How do we grow into international territories? Or how do we grow our markets? How do we expand? So a lot of the experience I've seen over the years and seen different types of business in different sectors, I thought, well, it's a real value that I can add to these businesses as opposed to just being an FD, because a lot of these businesses can't afford an FD. But if we can take care of their statutory side of things, the compliance side of things, I'm on hand to be able to help and advise businesses with their growth strategy, or if they're in difficulty, help them through these times.
Best showing when it comes to this monthly poll, and that is because he's able to gain ground in 6 of these 7 key swing states, though we should note that Trump is gaining ground in Georgia, one that Biden has not been able to do just yet, and he's also been able to flip one. So when it comes to Wisconsin, Biden is now leading Trump by 1 point. He trailed him by 4 points in February. Pennsylvania, they are tied, but Trump had a 6-point lead last month, and they're also tied in Michigan. And you mentioned the blue wall. This is really important to the Biden campaign. It's the northern battlegrounds, and they would pretty much all but mean Biden would have a second term if he's able to hold on to these northern battleground, these blue wall states. What we're showing is that he is gaining ground and even flipping when it comes to Wisconsin. So by and large, this is a good showing for the current president, given what we've seen in the prior polling and data we've had. One thing I would note, Manus, of course, especially as we're waiting important PCE data later this week, Americans, the swing state voters, are starting to feel better about the economy. The issue is they still say Trump is better when handling a wide range of pocketbook issues, everything from finding good jobs and also as well things like interest rates.
Yeah, but to a certain extent, this was the narrative that the White House was hoping would eventually filter through. I just looking at the driving season coming up, the price of gas is going to be at $4. That is going to bite in the pocketbooks. What do you make of the Trump story, the SPAC deal that went through yesterday? The stock was trading up furiously. Of course, the conundrum now is how can Trump utilize perhaps the value within the SPAC for himself? Can he? Or what are the impacts of this deal? This is his social media company reversing into a SPAC, and I think if it stays at this kind of price, he's going to be worth $6 billion.
Well, for the first part, it means that he was able to get on the Bloomberg's billionaire index, right? And this is going to be a windfall for the former president. There is this 6-month lockup period, but I did see some reporting that if he was able to get the okay from members of his board, which we should note, people on this board of this media company, the likes of Kash Patel, Robert Lighthizer, individuals that worked under the Trump administration, then potentially he can actually sell shares sooner. So that would give him a major windfall, especially as he's paying a number of legal fees.
Indeed. Well, we'll keep an eye on that stock price. Anne-Marie, thank you very much for being with us on the very latest poll. Coming up, we'll give you the morning calls on Bloomberg.
regional sports networks. There's a lot of, it's a business that seems to be collapsing. Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So I don't think I'm right on this, but my instincts keep telling me this is what's going to happen. Because if you remember the WWE, they launched their own network that had their own content and had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time and they sold their content to, what was it, Peacock?
Yeah.
And that was really smart too, because they were able to leverage that number as high as possible. So they always zagged where the money was and when the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
Up is back. One stock at the bottom of your screen. Trump Media Technology is rising furiously, up 27%. What will it mean for the wealth of the contender in the presidential race? Stocks are rising. Got a nice bump in Tesla. Some tech is up. Abigail will take you through the Trump stock in just a moment. Time now for your morning calls. This is what we've got from Wall Street. Jefferies upgrades Clorox to hold. The analysts say that the company's exit from Argentina and Uruguay and Paraguay is a long-term positive. Next up, Berenberg downgrades Stellantis to a hold. The analysts say there's little meaningful near-term upside and highlights a challenging 2024 for the auto industry. Finally, Raymond James raises the price target on Disney. Barclays upgrades the stock yesterday on the company's turnaround story. Coming up, well, we are set to return to Baltimore, addressing the Francis Scott Key Bridge collapse. We'll bring you that live as it happens right here on Bloomberg. Good morning from New York.
Names in tech are on Bloomberg.
There is a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All
all these devices becoming smart devices. They all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to provide crate index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything. From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
Let me just start with, this is not the first time we've heard this argument.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
Feel the relief at the nicey end of the NASDAQ because the mega meltdown is back. You got Tesla a bit up nicely this morning. We just had Invesco with us saying this is a justifiable situation. This is not a mania. This is not an exuberance. You have the likes of Tesla also flying higher. There's the bell at the opening day. We're up 0.3% on the NASDAQ at the moment. And in terms of the rest of the asset classes, keep an eye. You got Eurodollar up 1/8 even though PIMCO, for example, are not as long of U.S. Treasuries as they are relative. They have a preference for the UK and Canada. That's Andrew Bowles. A little bit more auction paper coming to the market. 5s and 7s will come, but PIMCO talk about the pace of rate cuts in the USA being slower than the rest of the world, and gold is up by 0.6%. We've gone through some records recently on that because there is a little bit of concern and hesitation ahead of the PCE on Friday. Core PCE expected to come in at plus 0.3%. One stock to watch, I mentioned it to you, it's Tesla. Now, an Italian newspaper is reporting that the country's officials have contacted the EV maker about their electric truck. Craig Trudell is with me. I mean, this truck is, I mean, it's a thing of beauty if you look at it conceptually, but talk me through. The Italians are keen on this.
Yeah, I think it's worth kind of taking a breath on this one, Manus, just in the sense that this company has been making semis under pilot production for more than a year. And as of late last year, the company, an executive said that they had roughly 100 in their fleet. So this is really moving at a pretty glacial pace for Tesla. We also had a very interesting interview on Bloomberg Television last week with the CEO of Daimler Truck, who believes that Tesla would have to redesign the semi for European use, that it's too long. So, you know, whether or not, you know, Tesla ever actually makes the semi in Italy, I think we're a long way from learning that. And my suspicion is that this is a reaction to Elon Musk saying in Germany recently that, you know, eventually it may make sense for Tesla to make semis there.
Okay, it's always it's an interesting one between price cuts, BYD competition, car production cuts, and here you go, a good news story coming through from Italy. We'll run with it. Craig, thank you very much. Craig Trudell. To the social media spectrum, Trump Media Technology Group soaring ahead in the first session as a publicly traded company. Abigail Doolittle has the details on DJT. Abby.
It's pretty amazing. Just moments ago, it was up 58%, currently up closer to 30%. But either way that you take a look at it, absolutely soaring on its first day of trading. The Trump Media and Technology Group, after its post-SPAC debut, they basically did a SPAC merger with Digital World Acquisition, as you mentioned, the new ticker DJT. Difficult to forget with the former president, his initials, of course. And it gives the parent company of Truth Social more than $275 million in capital, a win for Trump amid legal and financial woes, we should say. And at current levels, Trump's shares are worth, it's hard to calculate at this moment, at 11, when it was up 11%, that his shares would be worth $6 billion. So many, many multiples of that. He is subject to a 6-month lockup along with performance requirements. Now, while making the entity profitable is important in this election year, Manus, this may be the ultimate way of doing an informal bid or look at the election. Lots of investors using this as a way to bet on his bid for re-election. CEO of Exhilarate Financial Holdings saying that the underlying business fundamentals will matter at some point. But for now, quote unquote, DJT is the mother of all meme stocks. With the stock up 32%, up as much as 58% today, hard to disagree.
Let's see what the long-term trajectory is on the profitability. Abby, thank you very much. Abigail Doolittle there with the very latest on the social media scene. Let's turn to the consumer space. Krispy Kreme donuts are coming to McDonald's across the US. It's the burger giant's latest effort to boost the business breakfast. Simone Foxman is there. Oh, a Krispy Kreme at 3 a.m. in the morning. There's a thought. Simone.
Yeah, that's a sugar rush. You know, it's also a sugar rush for Krispy Kreme investors is what the shares are doing today. We've seen them pretty much recoup all of their losses so far this year. This is the biggest rally in Krispy Kreme shares since the company IPO'd back in July 2021. We understand that there was a test of selling Krispy Kremes at McDonald's in 2 cities in Kentucky, Louisville, and Lexington at 160 restaurants. According to a statement announcing this deal this morning, the demand exceeded expectations, and so Krispy Kreme donuts will roll out in the second half of 2024 and end up in all McDonald's locations by the end of 2026. Part of the reason investors like this, though, according to the CEO of Krispy Kreme, this will double the points of access for people who want these Krispy Kreme donuts across the country. It had been having a bit of a tough year, too, because, as Citi put it, the outlook it put forward back in February was not so sweet, with pressures from inflation and other things on its ingredients. Also saw a little bit of a slowdown in terms of expectations for what people wanted, but now it will be much wider availability of Krispy Kreme donuts, and that's clearly a positive for the stock this morning, Manus.
Volume is everything, isn't it? There you go, Krispy Kreme and your McDonald's. Simone, thank you very much. Let's pivot to Maersk stock this morning. Now, this is the Danish firm. It is the chartering company of the vessel that, as you can see there, crashed into the Francis Scott Bridge in Baltimore. Naha Katan joins me now. So what do we know in terms of the staffing? Is it Maersk staff who were on this ship? Who actually owns the ship? How does Maersk using this ship play out?
Thank you. Thank you for having me. So actually, its shares fell after it said it chartered the ship, but the ship sails under the flag of Singapore, and our Bloomberg intelligence experts say that the company may not be directly responsible for the collapse because the company had no crew on board and the ship was operated by a charter company. But we are seeing possibility of an extended shutdown, and that's going to cause major congestion for travelers and businesses, possibly for months, because the bridge, allows commercial ships to enter the port of Baltimore. It's one of the top ports in the U.S. By volume and value. It handled over 10 million tons of cargo annually. And it's also the largest U.S. port for handling cars and light trucks. It also handles sugar, imported sugar, coffee, and coal for export. So we're expecting that resulting bottleneck could accelerate a shift of goods through to the West Coast ports.
Would that almost be immediate, Naha? I mean, we're in the midst of managing a crisis, a human aspect to this crisis, a logistical aspect to this crisis. How quickly can shipping divert? It literally is instantaneous, isn't it?
Right. I mean, for now, if you go around the bridge, it extends the time from half an hour to about an hour. So this would have to be, pretty quick, a pretty immediate shift.
Okay. We are waiting that news conference to begin. As it does, we will bring that to our viewers. Naha Katanda on the implications for Maersk, the chartering company of the ship that collided with the bridge in Baltimore. Now, China is seeking to shore up confidence in the economy. Some of the U.S. CEOs in Beijing are receiving an invite to a Wednesday meeting with the top Chinese leader, widely expected to be President Xi Jinping. Pfizer and FedEx are the chiefs potentially having those meetings. Enda Karen is with me now. This is a very interesting moment. We have monetary policy, fiscal policy, and then we have brand Xi engagement, don't we?
Indeed, Miles. It looks like classic outreach from the Chinese authorities. Several of the big CEOs of U.S. companies are in Beijing at the moment for a conference, and throughout that gathering, the officials in China have been sending a message to the world that they are open for business, that the economic downturn is in hand, that they have policy tools to turn that around. And now we have our colleagues reporting that it looks like there's a meeting with a senior leader being set up for Wednesday. It's expected to be President Xi Jinping. That's a similar kind of model to what we saw at APEC in San Francisco back in November, when the executives had an opportunity to had an audience with Xi Jinping back then. So, to your point, it's when you consider the backdrop being about FDI at its worst in decades, overall kind of global sentiment towards China being pretty negative at the moment, this looks like a classic opportunity for President Xi Jinping to meet with leaders of some top US and global companies and, of course, make the sales pitch for what China can offer them.
From an economic perspective, and you talk about FDI, how critical is it? You've got fixed asset investment, you've got the consumer spending, you've got industrial spending, but you have FDI is perhaps the biggest issue. It's been that vacuum of money coming out of China. The flow has not been in the right direction. How critically important is it to Xi Jinping, and where do we stand on FDI right now?
I think it is important, Manus. I mean, the backdrop is we know China's economy has rebalanced over the years. It is now, of course, more consumer-driven than it has been. It is no longer just about manufacturing and export, say. But FDI is still a very important generator of economic activity and profits and exports, and especially during the downturn that China's experiencing now. Of course, they want foreign know-how, they want foreign technology, they want foreign capital, they want to see that sector expanding and growing. Some of the sectors aren't necessarily critical for their own national ambitions, but at the same time, at this stage of the economic cycle, I don't think many countries would want to be actively turning away FDI. So it is important. And the other side, of course, of that ledger, as you mentioned, is the portfolio flows. Global investors really have turned south on China over the past year or two at this stage, and there's no sign of that turning around in a hurry.
The price reaction for an economist, Intel and AMD, I'm sure you didn't spend a great deal of time mining down into that, but if I look at that as a reflection of the potential for escalation in tariffs and restrictions, there doesn't seem to be much of an off-ramp, even in this Biden administration, on the tariffs. And the risk is that you go into a second administration from Trump and that things escalate. How important is it for the world that there is some kind of an off-ramp in tariffs, that we head backwards rather than forwards and higher?
Well, we certainly seem to be in some kind of a holding pattern right now, Miles, ahead of the election. As you say, the current administration was pretty hawkish also on the trade front. They maintained those tariffs against China. They pushed through various export and investment controls and the like. And of course, now we have to wait and see what kind of administration comes out the other side of the election in November. But then, to your point, regardless which side it is, it's going to be either pretty hawkish or very hawkish altogether on China. And if it is the latter, with former President Trump talking about tariffs of maybe 60% or higher on Chinese goods, then obviously that would certainly impact trade between the world's two biggest economies, and it would ricochet around the world. It wouldn't just be tariffs, don't forget. There are other tools as well around investment and export controls. So it's fairly delicately poised right now. The world economy has a lot of fragility underneath the surface of okay GDP growth. So if the two biggest economies do go at it again in terms of a resumption of a trade war, then obviously that will reverberate right around the world.
And of course, this all comes as the Bao Forum takes form. There's a lovely line in there about FDI slumping to a near 30-year low in 2023 in China. So they've got a heck of a lot of work to do. And thank you very much, as ever, for being with me, Enda Karen, there on the macro story with China. Plenty more ahead on Bloomberg. We're waiting for the press conference to begin in Baltimore. You're looking at live shots of that pretty tragic scene of the bridge in Baltimore. We're bringing that news conference as soon as it begins.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
We're operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, the electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything.
The S&P 500 is on track to notch 5 straight months of gains from November through to March. Bloomberg's Jess Menton is here to talk me through the stats. This is a rare winter rally, Jess. I mean, it'll be quite something. If we do get to the close of business on Thursday, we'll have only done this a couple of times since 2013.
That's right, and it's very rare, specifically if you're looking from November to March, because that time period usually, as you know, there tends to be tax loss harvesting. So when you look back in history, usually you might see a down year in December or January, but the only other time this century that we've seen a 5-month streak of gains from November to March was actually in 2013, and then before that was actually in 1998. So that just shows you how rare this is. So in order for that to happen, the S&P 500 on Thursday would need to close around 52.47 and trying to get close to 52.50 there to hold on to those double-digit gains. So we'll have to see over the next few sessions.
And in terms of this melt-up, I mean, you've got Oppenheimer going for 5,500. You've got SocGen talking about 5,500. Is there any sense when you look at the data, if you rally as furiously as this in a 5-month period, what happens in the ensuing periods?
Well, typically what happens, and Jeff Hirsch over at the Stock Traders Almanac, he's really an encyclopedia of stock market knowledge. So he crunched the numbers to look at how rare it's been to see that 5-month span from November to March. And typically what happens is the remaining of the 9 months, there's actually been only 11 instances since 1950, but typically over that 9-month span, the remainder of the year, so the second quarter, third quarter, and fourth quarter, you do see in all 11 of those instances, the S&P 500 notching gains over that time period, not just for those 9 months, but also on an annual basis. And through those 9-month period, it was about a 12% gain for the S&P 500. And then not just that, we also tend to see gains also in April, 9 of the 11 instances there. So I know people are eager to see as the calendar flips to the second quarter whether or not those gains can hold. But history typically bodes well.
Bodes well. What, I mean, you know, I just had Invesco with me a little bit earlier, and they were saying, look, whether it's 3 cuts, 2 cuts, or 1 cut, it is not going to interrupt the narrative in the equity market. And I'm hearing this more and more. It is about the earnings, and those earnings had better live up to expectations. To what extent do the people that you talk to predicate their bullish view or this enthusiasm to rate cuts as well?
Well, it really, to your point, builds on the case of where the projection is for corporate earnings. And once again, in the fourth quarter, we did see those expectations pretty smashed there and beating things, especially when you came in and the expectations were for the S&P 500 to have earnings growth close to flat, but it ended up coming in around 8 or 9% higher than that. But if you look on an annual basis for the S&P 500 earnings growth this year, it's supposed to be around 11%, but those numbers haven't really budged too much from almost last May. So the consensus there is if growth continues to remain strong, maybe that could be feasible, but then if you do see growth pull back, whether or not that would have to be rectified in some of those profit expectations. But again, a lot of that has been carried, not surprisingly, by that Magnificent Seven and those growth stocks over the past year. So the base effects, if you just look year-over-year period as we go through the remainder of the year, won't be quite as robust compared to that base effect they were going off of 2022. So it'll be interesting to see as that narrows out with those tech and growth companies, what that means more broadly for the index and what other corners of the index we can see really carry some of this profit growth expectations.
Jess, thanks. Great story and certainly worth a read. Jess Menton there from Bloomberg reporting. Let's turn back to the tragedy at the bridge in Baltimore. Joining me now to talk about the impact on trade, it is Bloomberg's Brendan Murray. Brendan, good day to you. We're waiting for this news conference to come to tell us more information about the Francis Scott Bridge, the tragedy. But in terms of the perspective of this port on the eastern seaboard, why is it so critical to the flow of global trade into America and out?
Well, it's one of the top 20 ports in overall volume in the United States, but it's also a key port for auto industry exports and imports. So that is going to be a major issue. By all accounts, the port is going to be severely restricted for perhaps months. It might be closed completely for a long time. So the question is, where are all those goods going to flow? And those are questions right now we're asking to other ports along the eastern seaboard. The Port of Baltimore did about $80 billion worth of cargo value last year. That's about $6.5 billion a month. So every month that the port is shut or restricted is going to cost the local economy a lot of money. The port is one issue. The other issue is the traffic congestion around this major U.S. trucking corridor. All the traffic that would have been on that bridge is going to have to go around the other side of the Baltimore Beltway because much of it can't go through the Baltimore Harbor Bridge, which prohibits hazardous materials like chemicals and flammables like propane and those sorts of things. So it's just going to create on the ground and the roadways. It's going to create a lot of problems for goods that need to flow up and down the eastern seaboard.
Okay, Brendan, thank you very much. And as you can see, we've got a live shot there of the press conference, waiting for that to happen at the Francis Scott Bridge. No indications that the crash was intentional, according to sources in the U.S. at the moment. We're counting down to that press conference, and we'll bring that to you as soon as it comes live. Let's get how the coal miners are faring in the wake of this bridge collapse. Abby, you're with me again. We're just hearing from Brendan there. It's not just autos, but it is also a major coal port as well.
It certainly is, and we have some of the coal miners down sharply. In fact, we have Consol Energy having its worst day of the year at this time. At one point, its lowest, its worst day since October of last year. And the reason you were just mentioning, the Consol Baltimore Marine Terminal is used to load coal into large ocean-going ships in the area of the collapsed bridge. So again, Consol Energy is down, Ramaco down 3%. And then we also have some of the railroads down, at least one, because Consol's terminal is served by Norfolk Southern and CSX Transportation. Norfolk is down about 2.6%, or at least it was earlier. And then if we take a look to the upside, though, we do have the social media ETF up 1.8%. And this, of course, having to do a lot with the SPAC IPO, basically merger, the debut of Trump Media. The SPAC IPO, basically merger, the debut of Trump Media and Technology Group. That stock right now up 40%. And then if we take a look at the sector action very quickly, Manus, we usually do it in the other direction, but of course we wanted to move right into those coal stocks and talk about the railroads on that tragedy in Baltimore. We have most sectors higher, 10 of 11 to be specific. Overall, the index up about 1/4%. Discretionary is up 0.7%. The lone sector to the downside, well, that is energy, with oil down just fractionally.
Abigail, thank you very much. The ramifications are broad. Coming up in the show, the markets moving events that will take you. Actually, we're just going to go straight to the press conference.
This morning, our state is in shock. And I want to take this moment to speak directly to the people of our state. To our first responders, I'm in awe of you. I'm in awe of your courage. I'm in awe of your strength. I'm in awe of everything you do for each and every one of us. You saw a crisis, and you said, what can I do to help? And our response teams are doing everything in our power to rescue and recover the victims of this collapse, literally as we speak. People who, as we speak, are out there are divers, are air assets. People who right now are working to save lives and are doing it because the state asked. And we will update the public as the work continues. To our partners inside and outside of government, I know this has been a long night. We started coordinating immediately after the Key Bridge collapsed. We've been standing together every step of the way, from our county leadership, to our city leadership, to our state leadership, to our federal leadership. And I'm grateful to call each and every one of you not just colleagues, but I'm grateful to call you friends. And to the people of Baltimore, and each and every one of the 6.3 million Marylanders who call our state home, I recognize that many of us are hurting right now. I recognize that many of us are scared right now. And so I want to be very clear about where everything stands. We are still investigating what happened, but we are quickly gathering details. The preliminary investigation points to an accident. We haven't seen any credible evidence of a terrorist attack. Our administration is working closely with leaders from all levels of government and society to respond to this crisis, and not but just by addressing the immediate aftermath, but also by building a state that is more resilient and a state that's more safe. That is our pledge, and that's our commitment, and we're going to keep that commitment. And lastly, to the victims of this tragedy and their loved ones, all of our hearts are broken. We feel your loss. We're thinking of you, and we will always be thinking of you. We pray for the construction workers who are on the Key Bridge, and we pray for everyone who has been touched by this tragedy and their families and all of their loved ones. But Maryland, we will get through this, because that is the Maryland spirit, and that's what Maryland is made of. We are Maryland tough, and we are Baltimore strong. So in the face of heartbreak, we come together. We embrace one another, and we come back stronger. That's what we've always done. That's what we'll continue to do. And that's what we're going to get done together. And we're going to pray for Baltimore. And I'd like to turn this over to Senator Van Hollen, who's done a remarkable job on our bill and delegation in providing support. So thank you, Senator.
Thank you, Governor. As the governor said, we come together. We come together in Baltimore, we come together in Maryland. First of all, our hearts go out to all those who are on the bridge and their loved ones. We pray for them. Our gratitude goes out to the first responders who, as we speak, are out there continuing to conduct search and rescue operations. I want to thank the governor, the mayor, county executive, all the people gathered here as part of Team Baltimore and Team Maryland. And the federal government is with them as a partner. The Coast Guard, as we speak, is also part of this mission. Coast Guard cutters, Coast Guard aviation assets. I spoke twice today with Secretary of Transportation Pete Buttigieg. Pete Buttigieg has pledged that they will do everything they can to very quickly release emergency response funds for this important project. The National Highway Transportation Administrator is on his way to Baltimore if he's not here already. They will be releasing those early funds once all the parties are fully engaged. Second, the National Transportation Safety Board. I talked to the chair this morning. She and her team will be conducting an investigation of what happened. And finally, the Army Corps of Engineers, naval assets for looking below the surface and clearing. All of this is going to be part of the effort. The governor is leading Team Maryland, the mayor and the county executive, of course, Team Baltimore. But I'm just here to say, together with Ben Cardin, Senator Cardin, and Congressman Fume and others, the federal government is your partner in this effort. Thank you, and again, to the people of our state and the people of this great city. We're with you. We love you. We will get through this together. Thank you, Governor.
Good morning again. Paul Wiedefeld, Secretary of Transportation. Just a few updates since our meeting this morning. The crew that was out there working was basically repairing potholes. Just so you understand, that had nothing to do with a structural issue at all in the facility. At this time, one person has been rescued, and so far, and our efforts continue in terms of that. Engineers are on site right now, determining both some of the structural issues, obviously some of the debris field, and we'll start to work that, but we'll work hand in hand with the NTSB before we take any further action in that area. With that, I did want to introduce the FBI for a few comments as well.
Hello, my name is Bill Del Pano. I'm the special agent in charge of the Baltimore field office. First and foremost, I want to say that our hearts go out to everyone that is impacted by this tragedy, especially the victims and their families. On behalf of the FBI, I would like to say that we are with you, we're with Baltimore, and we're with the partners every step of the way. The FBI, on very first, looking at and assessing this matter from an investigative standpoint, I want to be clear that there is no specific or credible information to suggest that there are ties to terrorism in this incident. The FBI has been part of this response from the beginning. We came within 1 hour to the command post and quickly lashed up with our very strong partners all along the way. We will bring whatever resources that the FBI has to bear. We've already brought our crisis response, our victim services, and just recently, our underwater search evidence recovery teams are on site. And we will continue to provide all those resources as long as it takes. And as the investigation goes on, we will take it to its logical conclusion along with our partners. To the people of Baltimore, to the public, I ask you to be patient as we go through this and as information becomes available to us. And lastly, I want to say thank you. Thank you to our partners. Thank you to everyone who in the FBI and counts on the FBI. We will always bring what we need to the people of Baltimore, and we are with you. I'd next like to introduce the Coast Guard.
Good morning. The Coast Guard is still actively searching at this time. We are using response boat crews from 2 of our local Coast Guard stations, one of our helo crews from Air Station Atlantic City, and also one of our cutter crews on one of our 87-foot patrol boats. We will continue to work with our local, state, and federal partners during this tragedy. Thank you.
We are taking the press conference.
Governor Wes Moore, the Governor of Maryland, taking some questions.
As far as you are aware, was the collapse of that bridge inevitable as that ship hit that part of the bridge?
No, we're still in the process of investigating exactly what happened. So we don't have any further details about whether or not it was inevitable.
But no structural issue with the bridge?
No, there was. In fact, the bridge was actually fully up to code, so we have no further information about what happened in that.
Governor, is all shipping in and out of the port now stopped completely? And do you have any estimate very early on as to how long it will be before shipping can resume to the Port of Baltimore?
Yeah, we don't have any estimates on timeline because right now our exclusive focus is on saving lives. Our exclusive focus is on search and rescue.
Could you give us a better sense for the number? Because we had heard, I know Mr. Wiedefeld said 1 had been rescued, but earlier from Baltimore we heard that 2 had been rescued. Can you tell us the total numbers we're talking about that you're searching for, and how many have been rescued?
Well,
there are 8 individuals. 6 are being searched for right now. 1 is was taken to the hospital, and 1 is not in the hospital that we're speaking to.
So 6 unaccounted for?
Yes.
And does that involve the individuals that may have been in vehicles that went in the water?
Or is that just the construction?
We believe it's a construction.
Okay, so we don't think there's anyone in vehicles in the water?
No, we do not believe so.
Okay, we'll take questions right here. Take this question here.
Governor, 2 questions. How quickly did you find out about what happened here, and what was your reaction when you heard the scale of what just occurred at that bridge earlier today?
Well, I mean, I think it was probably within minutes of everything, less than an hour, when I know that my phone first rang. And, first from the mayor of Baltimore and also from our chief of staff. And it was, we know the Key Bridge. I've ridden over the Key Bridge countless times. So many of us know the Key Bridge because it is our normal commute. This is a place that is a normal commute route for over 30,000 Marylanders every single day. And so to hear the words that the Key Bridge has collapsed, it's shocking and heartbreaking. And immediately the first thought and the first ideas go back to what happened to the people, what was the impact on human life. But for every single one of us who are Marylanders, the words that the Key Bridge is gone, it still shakes us, because for 47 years, that's all we've known. And so this is not just unprecedented from what we're seeing, what we're looking at today. It's heartbreaking.
Governor, can you confirm that the crew on the ship alerted authorities that it had lost propulsion and was in trouble?
We can confirm that the crew notified authorities of a power issue.
And that they had lost power on the ship.
Was there any ability to shut down the outage?
Chris, we want to take the question right here.
Sorry, can you please repeat the numbers? Before you were looking for 7 people and 2 had been rescued, and now you are looking for 6 people, but 1 has been rescued, so 3 people has been rescued in total, or only 2?
Total of 8. A total of 8. 1 rescued in the hospital. 1 not in hospital, but is we've communicated with that person, and then 6 that we are searching for.
And all construction workers working on the potholes, or all 8 of them?
Yes, they were all related to the construction.
So we heard that multiple vehicles went into the water. Any word on how many vehicles went into the water and the condition of those people that were in the vehicles?
Not at this time.
All right, we're going to shift over here.
Was there any way to shut down the bridge? Was there enough time for that distress call to trigger something like that?
Now, the thing that we know is that, even as the boat was coming in, we had a ship that was coming in at 8 knots. So coming in at a very rapid speed. We do know that the investigation is currently going on. But I have to say I'm thankful for the folks who once the warning came up and once notification came up that there was a mayday, who literally by being able to stop cars from coming over the bridge, these people are heroes. They saved lives. They saved lives last time.
So they were able to stop traffic?
The focus is on rescue now and humanity. But looking forward, is there any vision for how long it could possibly take to the wreckage to rebuild, how it could possibly be done? Can you look into the future at all at this point?
This is going to be a long-term build. It's going to be a build that's going to require every facet and every aspect of our society. It is something that I can tell you we are going to get this done. We are going to make sure that this is not just rebuilt, but that we are going to rebuild in a way that remembers the people who this tragedy has impacted, and also do it in a way that honors the community that it serves. But right now, I could not give you any form of estimate on timing or cost. Right now, my and all of our exclusive focus is we're just trying to save lives.
Can the mayor talk on the state of emergency locally, please?
Yes, thank you. Listen, we know the governor issued a state of emergency, but we at the local level felt the need to do that too, because there may be some things that we have to encumber with fire department and other agencies that we'll be able to pull down support for as we all work together, again, as we're focused right now on saving lives and working through this unspeakable tragedy.
Just some clarity.
In the interim, I know that there's obviously the focus is on the rescue and the recovery, but this is such an important thoroughfare here in Baltimore for drivers, people trying to get around. How are they going to be able to manage while that is also going on?
Yeah, so we've also already been in touch with people about alternative routes and ways people can navigate now that this tragedy has happened. And I don't know, Secretary, if you want to speak to that as well.
Just to give you a sense of scale, roughly about 35,000 people a day use that facility. About double that use the Harbor Tunnel, and double that again use the Fort McHenry Tunnel. So basically, we have those 2 other options. We'll make sure that we have as much personnel out there to deal with any incidents, because I think that can cause backups very quickly. And we will basically, with a lot of communication with different alternatives, we're also looking at transit alternatives as well.
What role will the legislature play in this response? What role will the legislature play in this response? Are there any policies, any state funding that's going to be freed up in the coming weeks?
Oh yeah, no. So we are in fact, we have our Senate President here. We have members of the legislature here. The legislature is going to have a role in all of this, as will our local elected officials, as will state officials, as will the federal government. Everybody is going to have a role in terms of how we think about the rebuild.
Governor, how long do you expect shipping to be closed down through the port? Do you have any estimate in terms of the port here?
We don't at this point.
But no ships are going in or out at this time, right?
Correct. Yeah, we don't have an estimate on timeline as of yet. Our focus really is right now on just make sure we're safe.
What about the ships that are currently docked at the port? Are they able to get out at all, or no?
I'm sorry, say
the ships the vessels that are currently docked at the port, are they able to get out or no?
The one that's captured under the is that just
still at port?
Oh yes, that one's still at port. Yes.
We'll take one
Governor,
last
question. Was the ship being guided out by tugs, firstly? And secondly, did you just say that it issued a mayday in enough time that you were able to stop all traffic from entering both sides, so that the only casualties we expect are the workers on the bridge?
Yes, ma'am. So the investigation is still going on, so we're going to have all the full details and also all the full details about the timeline and the tick-tock that took place. But we're thankful that between the mayday and the collapse that we had officials who were able to begin to stop the flow of traffic, so more cars were not up on the bridge. But
there were some on the bridge, or not? Were there any?
During the collapse.
Yeah, were there some on the bridge? There have been reports that have been sonar that have detected vehicles at the bottom of the water. So as well as the 8 people, there could still be people trapped inside or potentially have died in vehicles. Is that correct?
I think, well, the investigation is still going on to find out exactly how many people in what situation. But the thing that we do know is that many of the vehicles were stopped before they got onto the bridge, which saved lives in a very, very heroic way.
So
Thank you all very much.
Thank you so much.
We'll have another update later. Thank
This
you.
is a huge detail. We don't know how many vehicles were on the bridge, basically.
Okay, there we go. That was a press conference with some of the leaders, I think, which is really interesting. Alex Steele joins me here now in our Bloomberg Interactive Broker Studios. We continue our coverage of this bridge collapse in Baltimore, Alex. And again, we had the governor, the mayor, the head of transportation, secretary of transportation. So all the layers of government that will need to come together to figure out what happened here in Baltimore and then to figure out next steps in terms of rebuilding that part of the state of Maryland.
And we did learn some things from that. One in particular is that they confirmed that the vessel did lose power. That is 100% confirmed now. And that it was coming in about 8 knots, which was, according to the governor, quote, rapid speed. And they are still investigating that. Lots of layers to go through. Clearly, it's going to take a while. I cannot imagine what it's going to be like to clear through all of that rubble also in order to move ships in and out again. So we just heard a press conference with the governor, the mayor, and the transportation secretary. The vessel did lose power. It was coming in about 8 knots towards the bridge, which is, quote, rapid speed, and they are still investigating why, and there is still a state of emergency.
Yeah, just extraordinary. And to have that video footage available of the accident as it occurred are going to give presumably a lot of clues to the investigators here. But as the video seems to confirm what they were saying here, that it did appear that the ship did lose power just before hitting the bridge. And you know, the understanding that we've had from interviewing some shipping experts this morning is that obviously would have had a very negative impact on the ability to steer the ship and for guidance and so on and so forth. So that will be flushed out, I'm sure, over the coming hours and days and weeks. Let's go to Amy Marsh right now, Bloomberg News. She's down in our 99.1 studios in Washington, D.C. She's been front lines for us and just trying to get a sense of what is going on in the city of Baltimore. Amy, what did you take away from this press conference?
I thought it was enlightening that they were talking about the time between the Mayday that the ship issued and the collapse of the bridge. Officials were able to move fast enough to at least stop the flow of traffic to keep at least some vehicles, they described it as many vehicles, off the bridge so that they had a little bit of time to work with.
Yep.
So that was interesting. And another thing that was interesting was they're already talking about the rebuild and what they're going to have to do and the steps that they're going to have to take to bring this bridge back, because it is a necessary part of the traffic, the artery that goes through Maryland. They also said that there was no timeline to resume shipping, which was very telling, the Port of Baltimore being a very important shipping hub. I do want to tell you one thing, though, if I could. Car traffic on the bridge is relatively light when you compare it with shipping traffic, trucks and vans, things like that. Little history here. The old Bethlehem steel mill is in that area in Baltimore. It closed for good back in 2012, but who took it over? FedEx, Amazon, Under Armour, BMW, 30 companies that have distribution sites all right there. And they all use this key bridge in Baltimore.
Yep, there's definitely different angles, right? You have cruise lines go there, you have cargo ships, you have basic shipping vessels, you have warehouses, you have energy exports coming there. There are lots of different facets there to the Port of Baltimore. Amy, listening to the press conference, what are the questions you think that will now have to be answered in the next couple hours? Like, what's that next presser going to look like?
I think a lot of people want to know why the bridge collapsed the way it did. It looked almost like a controlled implosion, didn't it?
Yeah.
They want to know why one ship hitting it would cause it to collapse. They also want to know why there were still cars on the bridge if there was enough time between the Mayday and the collapse to keep cars from going on the bridge. Why not get all the cars off? What was the hang up there? Or was there a hang up? Was it just a matter of clock ticking? There are some questions about people who may still be missing, of course. And what they're focusing on right now is loss of life and trying to preserve life. And that, I think, is what you're going to hear a lot about in this next presser.
Yeah, and you think about just the time of day, Amy. I mean, I guess the silver lining, if there is one, it was 1 o'clock in the morning, when, as opposed to rush hour. When I know from some of your earlier reporting here, you're saying hey, this is a pretty major road for the city of Baltimore and for that region of the country as well.
Absolutely. The fact that there were still cars on it and they had to keep cars from going on it that early in the morning is a testament to how busy this particular stretch of highway is. Also, I'm told that Baltimore city schools are out for spring break. And so a lot of parents are off, they're taking vacation, they're leaving town. So that's actually helped the amount of traffic lessen during this time of day, or during that time of day. So that actually helped keep the congestion down as well.
All right, just to recap here, we are following the Francis Scott Key Bridge collapse after being struck by a vessel. We were just listening into the press conference with the governor, with the mayor, and the head of transportation from Maryland as well. The things we do know is the vessel did lose power. 6 people are still missing, and 1 is in the hospital, and 1 seems to be okay. They are in direct contact with that individual, and the ship did issue a Mayday signal right before, which did quote-unquote save lives. They were able to stop the flow of new vehicles onto the bridge. Amy, can you just give a perspective on how important this route is, the bridge is, not for shipping, but like what it does for the city of Baltimore?
Well, can I just get into the sentimentality of it? I don't know if you heard the governor say this. You may have. Governor Westmore was talking about how heartbreaking it is to hear the Key Bridge is gone. I had the same response. It was just crushing because tens of thousands of Marylanders use this bridge every day, 31,000-ish, like 11 million a year. They use it every single day. It is a part of the landscape. It's a landmark. And they drove on that bridge to go home from work last night, and they woke up this morning and it's not there. That is crushing. And most of Maryland, I can tell you, and Baltimore, they're still in shock over this. It's jaw-dropping. It's one of those things you think would never happen because it is such an integral part of your landscape.
All right, Amy Marrs, thank you so much. We appreciate that as always. Amy Marrs, Bloomberg News. She's based in our 99.1 studios down in Washington, D.C. She has been absolutely critical to our reporting all throughout the morning here with real-time boots on the ground kind of coverage from Washington, D.C. Obviously, in addition to the loss, the potential loss of life and from this accident, a key issue here is this is a major impact for the supply chain of that part of the country, not only the highway, and as Amy was reporting, a lot of cargo gets transited over that highway, but also the harbor as well and the port of Baltimore. Let's check in with Brendan Murray. He's Bloomberg Global Trade Editor. Brendan, any early thoughts here that you're getting from some of your sources about what the impact could be to, let's call it the supply chain in that part of the country with the collapse of this bridge?
Yeah, I think most of the people we've talked to this morning are saying that the impact won't be national or global by any means, but there will be disruptions in the mid-Atlantic states, for weeks if not months. I heard part of that press conference, and yes, they don't know how long the port's going to be closed, but you don't have to be a structural engineer to figure out that if that channel is filled with crumpled steel, it's going to be months before the Port of Baltimore can be fully operational again. So, that's one maybe sort of glass half empty way to look at things. The other issue that they brought up was that the traffic around Baltimore can divert to 2 other main interstates, and that's that should relieve some of the pressure on the traffic that would have gone across the bridge, but this bridge took 5 years to build. So if we're talking about, I realize that bridge building equipment and technology would be better than it was back in the 70s when the Key Bridge was built. But we could be looking at, these kinds of detours going on if they have to completely rebuild this bridge for a couple of years. So I realize the local officials are trying to sort of keep a stiff upper lip and focus on the rescue as they should. But I think we're looking at a fairly difficult period of choke points and difficult logistics around the Baltimore area, if not the Mid-Atlantic states in general, for at least a few months.
So Brendan, let's talk about that. Not all ports are created equal. Not all ships are created equal. It's not as easy as, oh, I can't dock there, I'm going to go dock here. Can you talk us through some of the logistics of that, and what are some of the options for sort of the roll-on, roll-off ships, for example?
Right. So I mean, if we've learned anything through the pandemic and the war in Ukraine and the Red Sea shipping diversions that we're seeing right now, is that supply chains are pretty flexible. Ships can go to other ports, but as you mentioned, Baltimore is a big auto import-export port, so they have to have special equipment for unloading vehicles. They need special areas where cars can park, and not every port would have that. So that'll be a question. You know, where is this extra, or is this extra cargo going to go if Baltimore is blocked for any length of time? So I think we've got calls into some of these other ports along the East Coast to find out, look, how much extra cargo can you handle? But as we've seen time and time again, it's one domino falls, and it can create this sort of ripple effect across the supply chain. So you shut down a port like this for months, and it creates problems at other ports. So I think that's what we'll be watching, is how well can the surrounding region absorb this sort of supply chain shock this is going to cause.
And, Brendan, I'm just looking at the top live coverage on the Bloomberg terminal, which has just been indispensable today. Ford CFO John Lawler was on Bloomberg television moments ago, and he said Ford says the Baltimore bridge collapse will affect the supply chain, and Ford is looking to reroute car parts to other East Coast ports. And I know from earlier reporting that Baltimore is a really big port for importing automobiles and light trucks. I didn't know that, but that's one of the major ports. Have we heard anything about what the auto manufacturers might do?
Yeah, so some of them might not be affected. I saw something from Volkswagen that said that they had some peers that were outside of the damage zone. So it's not going to be an across the board thing. It may vary from car maker to car maker, and we're endeavoring to do that all day today. So it could be some are hit harder than others. But as you said, Ford. It sounds like it's already making plans to work around this disruption.
And it's not just about auto parts, also just energy. For example, a coal company was saying that it could stop coal shipments out of Baltimore for 4 to 6 weeks, which would effectively block the export of up to 2.5 million tons of coal, the majority of that going to India. So from that perspective, definitely some global ramifications. Brendan, thank you very much. We appreciate it, Brendan Murray, Bloomberg Global Trade Editor, joining us there. Let's get you updated on other stories we're following for today. Here is Lisa Mateo with Bloomberg Business Flash. Lisa?
You got it, from the Bloomberg Interactive Broker Studio. We want to start out with our top story this morning. It relates to Maersk. We've been talking about this all morning. Shares in Copenhagen right now, they're down more than 3.5%. Now, the company said the ship it chartered caused the Baltimore bridge collapse. The vessel operated by Synergy Group. All right, to the markets we go. Stocks right now, they're advancing following 2 days in a row of losses on Wall Street. Investors kind of awaiting the Fed's preferred inflation measure that comes out on Good Friday when the markets are closed. This morning, though, we did learn that U.S. durable goods orders, they rose in February for the first time in 3 months. They had bookings increase 1.4% higher than expected. And, of course, U.S. consumer confidence, that was also out. That held steady in March. As far as NASDAQ futures are up about 0.5%. S&P futures up 0.3%. The Dow up about 0.1%. And over to the bond market, we have the 2-year yield at 4.61%. That's down about 1 basis point. The 10-year yield at 4.26%. And that's up about 1 basis point. That is your Bloomberg Business Flash. Paul and Alex.
Lisa. Okay, let's get to some breaking data we had at the top of the hour, and that's consumer confidence. So the Conference Board Consumer Confidence for March coming in a little light, coming in at 104.7. Also, February was revised lower. The present situation a bit better, 151, but it was the expectation number that disappointed, coming in at 73.8. So let's dig through the numbers here. Joining us is Dana Peterson, Chief Economist at the Conference Board. Dana, what led to the lower expectation number?
Sure. The expectations number is made up of 3 pieces: employment, incomes, and business conditions, and all 3 were down in the month.
What does that tell us?
Well, it tells us that consumers are a little bit worried about the future. Certainly this expectations gauge has been dancing in and around 80, and 80 really is the threshold for which below that consumers think there's a recession coming. But we also do have a separate recession question where we ask consumers, do you think there's going to be a recession over the next 12 months? And they've been continuing to be less convinced of that. So there's some mixed implications here. Certainly they are a little bit concerned, but they don't think a recession's on the way.
So, Dana, it seems like from all the polling you see out there that inflation is probably issue number one with consumers out there. Yes, the rate of inflation has declined, but boy, prices are still high, whether it's food in the supermarket, gasoline for your car. What's your data show you about that?
Sure, we have write-ins where we ask consumers what's your most important issue, and complaints about inflation and prices are still number one. They're still complaining about food and energy prices, but in terms of energy, the complaints are a little less severe, a little less intense, so consumers are seeing a little bit of a break there, but for the most part, they're still very worried about prices being elevated, eggs and gasoline costing more than they'd like.
Yeah, ... because you take a look, there's a survey out that shows that gasoline in the summer could top $4 now. So there is coming out there. You look, cocoa prices, topping $10,000. And then you have this issue at the Port of Baltimore, right? And then you have this bridge collapse. And that could wind up affecting supply chains, et cetera. How do consumers react to these kind of headlines, right? $4 gasoline, bridge collapse. Like, how does this affect their level of confidence and their level of spending?
Sure. I mean, we can't tell from this report because the data was fielded.
Sure.
Survey was fielded before this happened this morning. But certainly, if consumers think that there's going to be higher gasoline prices or that supply chain disruptions from the incident in Baltimore are going to make clothing and cars more expensive, then certainly their confidence is probably going to wane.
All right, Dana, thank you so much for joining us. Dana Peterson, she's the chief economist at the Conference Board. We had the Conference Board coming out with some consumer confidence data today, a little bit weaker than expected, and some downward revisions from the prior month. So again, consumers a little bit wavering some confidence out there as inflation remains stubborn for many folks out there. Michael McKee joins us, our global economics editor here. And Michael, when we see a bridge in a major port city like Baltimore collapse into the river, there are economic implications here, and we're just learning more and more about Baltimore as a port city, Baltimore as a city where a lot of cargo transits over that bridge. How are you thinking about it from, I guess, a regional economic impact?
Well, it's a regional impact and to a certain extent a national impact because of the type of cargo that Baltimore handles. It is the largest port for automobile imports.
And I didn't know that before
almost
today.
900,000 cars and other trucks came through there. Plus, they also handle what they call roll-on, roll-offs for big companies like Caterpillar and John Deere. So a lot of equipment goes through that port. It is one of the bigger ports on the east coast of the U.S. So there's going to be an interruption there. First of all, because there's no way to get in or out of the port at the moment until they clear the wreckage of the bridge. Bloomberg's trade people have noted there's 21 ships behind the bridge that can't get out again. And then there are more that would be coming in that in theory can be diverted, but it's going to be a question of capacity for getting that tonnage off those ships in other ports.
It's interesting. I have to admit, I am a kind of a trade shipping geek, and I have an app on my phone that tracks this stuff. So I'm sitting on the Jersey Shore beach, and I see a big cargo ship go by. I want to know where it came from, where it's going, what it's carrying. And what I do notice is the ones leaving the New York Harbor, often the next stop is actually Norfolk, Virginia, more so than you would say Philadelphia or Baltimore. So perhaps, but I can't imagine putting 900,000 cars. Who's got room for that?
Right,
So
that's going to be that's going to be a bit of an issue. They also it's a major distribution hub there on the north side of the bridge. They have Amazon, FedEx, Under Armour, Home Depot. They all have big warehouses there, and the stuff that comes in and out to those warehouses, and this will be more of a regional impact, but won't be coming in and out. So there's going to have to be a lot of logistical changes made. Now, the good news is, to the extent that I don't know if it's good news or not, but we have had some bridge collapses in recent years. Remember in Minnesota and in the Bay Bridge in Oakland. Others like that have happened. Philadelphia had the I-95 bridge, and putting a bridge back together is easier than building it from scratch. Now, this is a much worse. This is a much worse situation than those.
Yep.
But they were able to get them rebuilt on a fairly quick timetable. It took 5 years to build this bridge. So the hope is it would not take that long to rebuild this bridge.
So let me ask, how long, this is a completely unfair question to give you in a minute, but how long does it take for these kind of issues to filter down into prices, for example? And then how does the Fed going to look at it? Because yes, it's transitory, but 2.5 years and then the confidence and the expectation of inflation, that isn't transitory.
Well, it's hard to say at this point because companies are much better, and the pandemic forced them to be much better at being able to change their supply routes and supply lines on short notice. If we don't get stuff or we can't ship stuff, it will raise the price probably, but it has to last for a while if they can find alternate ways around it. Transportation is a very, very small part of overall goods prices, so it's probably not going to have a major national impact. It may have an impact certainly on Baltimore, and obviously it's going to be a major impact for a while in terms of traffic going up and down Interstate 95. Probably the biggest impact is going to be with hazardous materials. Because they can't go through the 2 Baltimore tunnels. They could only go over the bridge. So now they're going to have to make a wide detour around Baltimore. That'll slow things down.
All right, Michael McKee, thank you so much. We appreciate that. Michael McKee, our economics editor, with our news in New York City. Here's Michael Barr.
Paul, Alex, thank you very much. As we've been talking about all morning, a container ship rammed into a major bridge in Baltimore early today. The Francis Scott Key Bridge, causing it to snap in a few places and plunge into the river below. Several vehicles fell into the chilly waters, and rescuers are still searching for at least 7 people. The ship caught fire and thick black smoke billowed out of it. Maryland Governor Wes Moore declared a state of emergency and just gave a news conference a few moments ago.
And our response teams are doing everything in our power to rescue and recover the victims of this collapse, literally as we speak. People who, as we speak, are out there are divers, are air assets, people who right now are working to save lives and are doing it because the state asked.
Also at the news conference, U.S. Senator Chris Van Hollen of Maryland.
We come together in Baltimore, we come together in Maryland. First of all, our hearts go out to all those who are on the bridge and their loved ones. We pray for them. Our gratitude goes out to the first responders who, as we speak, are out there continuing to conduct search and rescue operations.
The ship smashed into one of the bridge's supports, causing the structure to break apart. The Supreme Court hears arguments today in a case that could restrict access to the abortion medication mifepristone. The ruling could possibly halt mail delivery of the drug, as well as telehealth visits at which it can be prescribed. Law enforcement officials have raided 2 properties owned by Sean Diddy Combs. According to AP, the music mogul's homes were searched in Los Angeles and Miami by federal Homeland Security investigation agents. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Bloomberg Intelligence brought to you by IBKR Investment Advisors. Switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges and no conflicts of your interest at ibkr.com/RIA. To the markets we go, where stocks are higher. This is after 2 days of losses, but a pretty good run for the S&P 500. Finished last week 14% above its 200-day moving average. Healthy U.S. economic data, expectations the Fed's going to cut rates, and optimism about artificial intelligence have all driven the S&P 500 up almost 10% this year. The S&P right now is up about 0.2%, but it's flirting with another record, 52.41. Right now we're at 52.29. The NASDAQ also flirting with a closing record. That record 16,428. Right now the NASDAQ at 16,428. There you go. As far as the Dow, it is up about 0.1% at 39,384. Over to the bond market, we have the 2-year yield at 4.62%. That is little change, and the 10-year yield at 4.26%, and that is up about 1 basis point. That is your Bloomberg Business Flash. Alex and Paul.
All right, thank you so much, Lisa. I'm Alex Steele here with Paul Sweeney. This is Bloomberg Intelligence Radio. We are live from Interactive Broker Studio right here in Midtown Manhattan. You can also check us live on YouTube as well. I want to get you updated on the Baltimore Bridge collapse, the Francis Scott Key Bridge collapsing earlier this morning. Amy Morris from Bloomberg is reporting on all the latest. Amy?
Well, we can tell you about shipping through the port of Baltimore. We've been keeping you informed about how crucial it is for the East Coast. Bloomberg News now reporting that the bridge collapse could stop coal shipments out of Baltimore for 4 to 6 weeks. That's according to Xcoal Energy. It's a Pennsylvania coal trader. They work with several suppliers. Baltimore exports 20 million tons of coal every single year. That would be stopped for 4 to 6 weeks. Now, we also know that there are more than 20 vessels still in the port. Some are cargo, some are tugs, there are other vessels there, but nothing is going in or out right now. And according to the governor, there's no timeline when they plan to resolve that. And just so you can get an idea of what this means for traffic on the roads, Bloomberg News has also taken some mileage measurements for you on that. A trip from Edgemere, Maryland, heading south to Glen Burnie, Maryland. Trust me, it matters. 15 miles over the Key Bridge, all right? Wow. For travelers with certain hazardous materials, if you can't take the tunnels, you're going to travel 45 miles instead of the regular 15 miles. So that's the big difference that you're going to be facing with this bridge gone.
And Amy, I guess what I learned this morning at least was Baltimore is the #1 port for importing automobiles and light trucks.
Yes.
Have we heard from any of the manufacturers about maybe contingency plans, or is that too early?
I haven't. Doesn't mean that it's too early. It just means that I haven't heard anything about that yet. But certainly there are contingency plans in place. They're going to want to get their goods out. So we're going to find out what that is too.
Amy, we're going to hear from President Biden later on today. We just learned that. What are some of the issues that you think need to be addressed?
Well, certainly infrastructure, right? Why was this bridge able to collapse as though it were a controlled explosion when a ship hit it? Now, certainly, what are you going to do to stop the ship? The ship is enormous, and it's going to cause some damage. But the entire bridge, 2 miles, almost 2 miles of bridge, went into the water. There was just enough time, by the way, from when the Mayday call went out to when the bridge collapsed, for law enforcement to keep more people from going onto the bridge. So that was a blessing. That was good. But at the same time, why did the bridge collapse so quickly and in such a manner? So infrastructure is going to be a big part of this. Engineering is going to be a big part of this. How to rebuild and how to make it better is going to be a big part of this. I think President Biden's also going to want to talk about the loss of life. That'll probably be one of the first things he addresses.
Yep. Amy Mars, thank you so much for that, Amy. Appreciate it. Amy Marsh, Bloomberg News. She's based down our 99.1 studio in Washington, D.C. She's been the front lines coverage for us today on this news from Baltimore. And there's also, obviously, the shipping aspect to it. And Maersk was involved. And Maersk is one of the largest global shipping companies. We want to get I'm looking at the stock here off about 3% today. Maersk is trading in Europe. That is a 52-week low for Maersk. But let's get a sense of what that means for the company. Stefan Kovachev joins us. He's Bloomberg Intelligence industrial credit analyst. So, Stefan, have we heard anything? Let's step back and say, what was the role of Maersk in this incident?
Well, good morning. I think Maersk is the company behind this ship, but the actual involvement of Maersk was very limited. So the container ship involved in this very tragic event in Baltimore was actually chartered by Maersk from a company called Synergy, based in Singapore. So the Singaporean company was operating the container ship. So just maybe very quickly to oversimplifying things, but Maersk is a bit like a passenger in a taxi. So imagine you want to move goods from point A to point B. You could, buy a car, rent a car and drive it yourself, or you can go for a taxi or an Uber with a driver in the car who will move along you and the luggage, right? So I think in the case of an accident on the road, it's the driver's responsibility and maybe the company operating the taxi who will be responsible and not the passenger. So I think we at least hope from our preliminary findings is that Maersk should not be really liable for this incident.
So just to be clear, we're equating Maersk with the passenger in the Uber or in the rent-a-car?
Yes, correct. Yes.
I see. Okay, that's definitely helpful. We did learn from the recent press conference, though, that there was a loss of power. Do we know how that kind of works for a vessel? Like how something like that might happen, and then where then the responsibility lies with that?
Well, I think it's it's a very, very complex, very expensive machines. I think what we spoke to the company this morning, and what we got from them is that. At least our understanding is that the responsibility for this would be with Synergy. Now there is a whole different angle. What happens if, let's say, Synergy cannot pay or goes bankrupt? That's a whole different, legal aspect. But going back to the taxi example, or maybe giving you another one in terms of, let's say, you want to charter an airplane. Let's say for a football team to move around, if you charter the airplane, you are not busy, paying for a pilot or finding a pilot or repairing the airplane. Someone else does it for you. So the charter company will be the one inspecting and maintaining the airplane and paying the pilot, right? So I think in this case as well, Synergy is pretty much on the hook as compared to Maersk. At least this is our understanding at this stage.
Stefan, as a credit analyst, can you give us a sense of the balance sheet quality of Maersk? I see a lot of debt, but I also see a lot of cash on the balance sheet. Give us a sense.
Yes, absolutely. I think in a very worst case tail risk scenario, Maersk has about 24 billion of liquidity currently, a net cash position, as you were mentioning. So they are a bit of an outlier in the shipping industry, which is very capital intensive. It costs a lot of money to operate those container ships. But in this case, Maersk is investment grade rated. And even if they were to pay, a few billion, I mean, this is, just a random number, we doubt that they will lose their investment grade ratings, which is very important for me as a credit analyst. So they are, a very good, very solid investment grade company.
I love it when you're like, yeah, it's a couple bill,
Exactly.
It's, we can take that in. But before we let you go, globally, though, like how is the shipping industry sort of doing with higher rates and question marks about the global economy?
Well, I think the situation is a very volatile industry, as you can imagine, with the pandemic. And then we had the Red Sea disruptions, which are still ongoing, and now this tragedy in Baltimore. So I think overall we should expect maybe going for more congestion in the ports. Which is kind of bad for us and consumers, but maybe not so bad for companies, as for if freight rates go up again, this should be a positive for the container shipping industry, at least in the short run.
All right, Stefan, thanks a lot. Really appreciate it. Stefan Kovacev, he joins us from Bloomberg Intelligence. He's an industrial credit analyst. But interesting to see sort of how you can connect all the dots eventually, and then what the global impact could potentially be.
Yeah, so there's definitely, I found interesting some of the reporting we've had from Bloomberg about the northern end of that bridge, or a lot of distribution centers from the Amazons of the world, and use that bridge precisely because of that. So I'm interested to see how those folks adapt.
And I should point out that Maersk is now saying that they will reroute cargo directed for Baltimore, just to fill you in on that. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Shares of Maersk are lower after the company said the ship it chartered caused the Baltimore Bridge collapse. We have Bloomberg's Naha Katan has more on that vessel.
The ship sails under the flag of Singapore, and our Bloomberg intelligence experts say that the company may not be directly responsible for the collapse because the company had no crew on board and the ship was operated by a charter company.
Now, that ship operated by Synergy Group. Maersk shares right now, they're down about 3% in Copenhagen. WeWork's co-founder Adam Neumann has reportedly made an offer of more than $500 million for WeWork. Now, the Wall Street Journal says it isn't immediately clear how he's going to finance that deal. And Trump Media and Technology Group, those shares are soaring. Right now, they're up 42%, but they climbed as much as 58%. The stock trading on the NASDAQ under the symbol DJT today after completing that deal with Digital World Acquisition. Tesla is set to extend gains for a second consecutive session, and this is after an Italian newspaper. It reported that country officials have contacted Tesla about electric truck production. Bloomberg's Craig Trudell has more on that.
This company has been making semis under pilot production for more than a year. And as of late last year, the company, an executive said that they had roughly 100 in their fleet. So this is really moving at a pretty glacial pace for Tesla. We also had a very interesting interview on Bloomberg Television last week with the CEO of Daimler Truck, who believes that Tesla would have to redesign the semi for European use.
Now, Tesla shares up about 6%. Meanwhile, EV startup Fisker has been delisted from the New York Stock Exchange after its shares plunged following news that it would not be getting an investment from a major automaker. And finally, sweet news from Krispy Kreme. Its shares are higher after announced the company's donuts would be sold at McDonald's. I'm Lisa Mateo.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Tuesday, everybody. I'm Alex Steele alongside Paul Sweeney. We're live from Interactive Broker Studio right here in Midtown Manhattan with Bloomberg Intelligence Radio. You can also check us streaming live on YouTube. We give you all the analysts or all the companies and all the industries that Bloomberg Intelligence covers worldwide. We also give you world and national news. For that, we go to Michael Barr. Michael?
Thank you very much, Alex, Paul, Lisa. We've been telling you about it all morning. A container ship rammed into a major bridge in Baltimore early this morning, causing it to collapse in a matter of seconds. Several vehicles plunged into the chilly river below. It was not clear why the cargo ship crashed into the Francis Scott Key Bridge. Rescuers did pull 2 people from the water. Maryland Governor Wes Moore.
And to the people of Baltimore, and each and every one of the 6.3 million Marylanders who call our state home, I recognize that many of us are hurting right now. I recognize that many of us are scared right now. And so I want to be very clear about where everything stands. We are still investigating what happened, but we are quickly gathering details.
Governor Moore says the ship's Mayday call enabled officials to limit traffic on the bridge before the crash that caused the collapse. The Supreme Court is hearing arguments today in a case that could determine access to abortion medication for millions of women. The dispute revolves around whether the FDA overstepped its authority when it made it easier to get mifepristone, one of the 2 drugs used in medication abortion. Anthony Metzger, the spokeswoman for Planned Parenthood, says it's the biggest abortion case since the justices overturned Roe v. Wade.
This could upend and jeopardize medication abortion access in all 50 states. There's a lot at stake, and it's really unfortunate that almost 2 years later, we are back at the Supreme Court fighting for our rights.
Carol Tobias, president of National Right to Life, says the justices need to rein in the FDA.
They are letting their zeal for abortion guide their actions and control their actions. I do question their sincerity and their expertise in this area.
The High Court must decide whether to reverse a federal appeals court ruling that cuts off access to mifepristone through the mail and shorten the time the drug can be used from 10 weeks to 7. Global news, 24 hours wherever you want it. With the Bloomberg News Now, I'm Michael Barr, and this is Bloomberg. Alex, Paul, Lisa.
All right, Michael, thank you so very much. Let's get back to this story here. Krispy Kreme. Those shares are surging the most since July of 2021 after McDonald's agreed to bring the chain's donuts to restaurants all across the U.S. To me, this is a twofold thing, Paul.
Yes.
One, you got McDonald's wants to attract more breakfast people. Okay, sure.
Right.
If one eats a donut from Krispy Kreme for breakfast, sure. But also, Krispy Kreme is not in a good place. It has been really tough, particularly with Ozempic and all the weight loss drugs. A lot of analysts have downgraded the shares, being like, this will happen, and the overhang will be there for at least 6 to 12 months, if not longer. That's according to an analyst from Truist Securities.
Well, a good day for the stock today. Krispy Kreme up about 28% here. This is a company that's got a $2.7 billion market cap, but certainly getting a big pop today. Presumably, it's all about distribution. Why open up a Krispy Kreme store and all the economic costs associated with that when I can just drop off some donuts at McDonald's? And there's a few of those around. So
No, it's a smart move by Krispy Kreme for sure. That makes a lot of sense. Also, ew.
Yes.
I mean, being that if you're gonna go eat like a burger and fries at McDonald's and then get a crisp, I don't know. Do you feel your arteries hardening as we just talk about it?
Exactly.
Lisa does. She feels me on this.
It's horrible.
I walk into a McDonald's, I get the burger and fry smell.
Yes.
I'm not thinking.
You're not thinking donuts.
I'm not thinking donuts.
It's a salty sweet situation. Like maybe,
Right.
that's a good call. Like maybe you're not wanting both of those.
But if you're starting it, they've been starting to put them in different grocery stores. Like you see the Krispy Kremes out there in Acme's or Stop and Shop and things like
Acme's?
that too. Yeah, Acme. They have the Krispy Kremes laid out right at the checkout.
I haven't been to an Acme since I was a kid.
Oh, coming out to Jersey, we'll show you all the fun stuff.
We don't have that in the city.
To take you on a tour, but I don't know. It's good that again, Krispy Kreme, DNUT is the ticker. How about that donut? Up 27% here, $15.92, up about 5% year to date. So they really needed this shot in the arm, and they got it. S&P 500 up 0.3%. We'll have more coming up. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, we're going to have continuing coverage on the ground from the bridge collapse story in Baltimore. We'll have reporting there coming up. We're also going to check in with Mark Niquette, Bloomberg Real Economy reporter, on the latest morning consult poll in which President Biden erases Trump's lead in blue wall states he needs to win. So we'll get the latest reporting there. And we'll check in on the markets. Carol Schleich, she's the CIO at BMO Family Office, and she's going to join to discuss her outlook for the markets. But right now, let's kick it all off. Get a Bloomberg Business Flash with Lisa Mateo.
You got it. And we've got green on the screen following 2 days in a row of losses on Wall Street. Investors kind of waiting for the Fed's preferred inflation measure. That comes out on Good Friday when the markets are closed. This morning, we've got some economic data, and we've learned that U.S. durable goods orders, they rose in February for the first time in 3 months. Bookings increased 1.4%. That was higher than expected. And U.S. consumer confidence kind of had held steady in March. Consumers are focused now toward the election. We head over to the bond market. 2-year yield at 4.61%. That's down about 1 basis point. And the 10-year yield at 4.26%. That's up about 1 basis point. We'll take it to the 30-year at 4.42, and that's up about 1 basis point as well. Over to commodities, we have spot gold higher at $2,179 an ounce. And as far as oil, we have NYMEX crude, $82 a barrel, Brent crude at $86 a barrel. To currencies, the dollar weaker, Japanese yen, euro, British pound, though, is weaker. We have Bitcoin, that's lower at $70,068. That is your Bloomberg Business Flash. Alex and Paul.
All right, Lisa Mateo, thank you very much. All right, want to follow everything that's happening with the Francis Scott Key Bridge collapse. Maersk is the latest, coming out and saying it's omitting Baltimore on all of its services for the foreseeable future. As we had an analyst describe, Maersk was basically the passenger within the vehicle at the end of the day. It's rerouting all of its cargo that was directed for Baltimore. Let's get more on the latest here with Amy Morris. She joins us in D.C. All right, Amy, what's the latest?
All right, Alex, let's just remember the ship that hit the bridge is a cargo ship under the flag of Singapore. It's chartered by Maersk. It's called the Dolly. And as you said, Maersk is saying they're going to reroute their cargo that's originally directed for Baltimore. They're just going to avoid it for now. Now, East Coast ports are stepping up. New York, New Jersey, Virginia, they're all saying that they can handle any additional ships if the port of Baltimore remains inaccessible. And that could actually help with some of those trade concerns. And at this time, we don't have a timeline for when the port will be open again. It is a mess. There is a bridge in the water. Now, President Biden will speak about the Key Bridge collapse today. We talked about this earlier. He's leaving for North Carolina. He's going to stop and have a few words about this. Sources tell Bloomberg now the administration is also looking at ways to unlock some funding for this recovery effort, expanding the use of funds from the infrastructure bill. That would be appropriate. They're going to try to figure out how to do that. Also, we also expect President Biden to visit the disaster area in coming days. We are calling it a disaster area because the governor of Maryland has declared it a state of emergency. So that's what's going on there. That also allows the federal government to step in and provide more assistance.
And Amy, Bloomberg News is also reporting that there are approximately, or at least 21 ships that are, I guess, west of the bridge collapse site, presumably stranded in the port of Baltimore. Any news about the fate of those ships?
So far, they're having to stay put. Some cargo, some tugs, other vessels. It's more than 20. I think you're right. I think it is 21. And they nothing's going in or out right now. It's not safe to go in or out right now. There's a lot of debris in the water. They're calling it a debris field, which you think of when a plane crashes. This is a bridge collapse. It's an enormous area. And let's not forget that there are currents. The tide came in this morning, which made the search and rescue even more difficult. So that also expands the area of this debris field. So everything has to sort of hold steady for now. And one more thing to remind you of, there was road work going on overnight on this bridge because road work. And those workers were tossed in the water when this happened. There are 6 of them who are still unaccounted for. That water is 50 feet deep, about 47 degrees Fahrenheit. And officials say because of that rising tide and those currents, a very difficult search and rescue operation that is going on.
All right, Amy Morris, thank you so much. We appreciate it. We'll check back in with you in about half-hour time. Let's go to Skylar Woodhouse now. She is Bloomberg transportation reporter joining us on this. Skylar, I'm really fascinated in sort of how the logistical supply chain is going to change. Yes, if you have a cargo ship, maybe you can put it in another port, but anything that comes in from warehouses or by truck, if you're rerouting and what the traffic will look like, what are you hearing from your sources?
Oh, yeah, this is definitely something that has caught a lot of people off guard. And, ports are kind of now just recovering from what we saw during the height of the pandemic where they were so overloaded. So, it will be interesting to see how this shakes things up and where ships are rerouted to. Are they able to, once, they clear the bridge, are they going to go to Baltimore, go up to New York, go somewhere down south? So it's kind of a guessing game as to what will happen and where we could see all this cargo going.
And Skylar, like a lot of people, I guess this morning I pulled up my Google Maps to kind of get a closer look at the greater Baltimore area, and that Route 695 that's part of that bridge that collapsed. There's a lot of, that's a big transportation hub there. There's traffic, automobile, truck traffic, and it seems like that 695 artery, which is now disrupted. Any sense of how that's going to hamper just kind of transportation and logistics in that market?
Oh, yeah, it's definitely going to disrupt the way, people move, get around. You think of the DMV area, DC, Maryland, and Virginia, and it's already a congested, really mess traveling by car a lot of times, especially during, the rush hour times. So this is definitely going to disrupt and create, even more traffic disruptions than normal. And so it will be a waiting game to see how this, what this plays out to look like. It's definitely going to be a challenging time for how people get around. But the nice thing is, on the flip side, is that, there are other ways to get around, but it's just going to cause a lot of disruption for how people get around.
I have a really uneducated question in terms of how stuff is transported. So if I'm trying to move something on a ship, can I then move it in a truck? Is it that simple? And then how does the truck, what's the process at which I can flip and go intermodal?
No, that's a great question. I'm sure it's what's being talked about for those trying to figure out what they're going to do to everyone's Amazon packages. So it's definitely, you can transport things by rail, by truck,
I think the next step will be figuring out the ships that are coming in, where are they going to go? So then that way they can reroute what is on that ship. But yes, you can definitely transport, by rail, by truck, but it'll be figuring out where can we take these ships so that way they can then be unloaded. And once they go somewhere, how long might they have to wait? Because that port is probably already dealing with, some sort of backlog of cargo that's waiting to be unloaded.
So, Skylar, have we seen any estimates about the economic impact to the city of Baltimore? I just wonder about that. If that port's going to be shut for an extended period of time, I would think that would have a meaningful impact on the local economy.
No, yeah, I mean, that's a great question. It's definitely not something I would think, the port would want to have to deal with. So, but I mean, to hedge it a little bit, the area is definitely very bustling. So it will be interesting to see how much economic impact it does have. I think it's too soon to say, oh, this is going to really disrupt things. I think we have to kind of walk it with like a little bit of caution and see how this plays out. But I think it's important to think of, like, we already have some ships that are there. So how much of those ships have been unloaded, and then what's coming in. So it's definitely going to be a guessing game, and like one to watch as things develop.
Skylar, what's on your plate for today? Like, okay, you finish this and then you're going to go report. Who are you calling? What are you doing?
Yeah, so I actually just got off of a call prior to coming on here, and was chatting with someone about just like what's going on, why do we care, what do I need to be paying attention to. So it's really just making calls, getting in touch with all of the experts out there, because I'm not an expert, so getting in touch with the experts to kind of tell me what is going on and making sure that I'm up to speed on everything. I think a big question on everyone's minds is, how much is this going to cost? Who's going to pay for it? What does the liability look like for the ship and that company? So yeah, there's definitely a lot of questions on what's going on, and even just like how quickly will this be repaired. So we have a lot of unanswered questions that I think everyone is trying to figure out.
All right, Skylar, thanks a lot. Really appreciate it. At least we're all like kind of in the dark trying to make sense of this. Skylar Woodhouse joining us there, Bloomberg transportation reporter. So President Biden will be speaking on this later on in the day. There are questions, of course, as to how it's handled, who's going to pay for it, what the support winds up looking like. And this kind of ties in to a survey that Morning Consult and Bloomberg did overnight. They're doing a monthly report, and it shows that President Joe Biden has gained some ground against Republican Donald Trump in 6 of 7 key swing states. So we want to get more on this with real economy reporter for Bloomberg, Mark Niket. He's joining us on this poll. What are the findings that you have?
Well, the poll shows, it's a monthly tracking poll that we've been doing since October, and it shows that Trump's still doing pretty well in Georgia, Arizona, and Nevada. But the most significant findings is that Biden has improved his standing in Michigan, Wisconsin, and Pennsylvania, sort of the blue wall. I think these states are going to decide the election, and he needs to win these states if he's going to get a second term. In Wisconsin, Biden now holds a 1-point lead over Trump after trailing him by 4 points in February. In Pennsylvania, the candidates are tied after Trump had a 6-point lead in February, and they're also tied in Michigan.
Any common denominator here, Mark, as to what might be driving some of these poll numbers?
Well, the timing of the poll was interesting. It was conducted March 8th through the 15th in the swing states, and that March 8th is a day after Biden's State of the Union address, which was pretty fiery, and I think alleviated some Democratic concerns about the president's age and his fitness to take on Trump a second time in a rematch. And it's also midway about March 12th is Super Tuesday, when both Biden and Trump sort of clinch the respective nominations. They got enough delegates to clinch. So it kind of really made it a binary choice. We knew this was going to be the outcome, but I think the Democrats in particular were thinking that until it was really clear in voters' minds that this was going to be a rematch and it was Trump or Biden, that's their choices. that Biden was not going to do as well in the polls.
Mm-hmm.
So this is sort of the first poll that we have it clearly established that it's going to be a Trump-Biden rematch.
Are voters voting because they like the candidates or because they don't like the other one?
Well, interestingly, our poll showed that in the case of Trump, most of the support is coming from people who like Trump. Only 3 in 10 Trump supporters said they were voting for Trump because they didn't like Biden. They're essentially voting against Biden. But the case was different for Biden. About half the supporters of Biden said they were voting for the president essentially as a vote against Trump. They didn't want to see Trump get back into the White House. It was even more pronounced in Wisconsin, where like 6 in 10 of the supporters of Biden were voting for him because they were voting against Trump.
To that point, are those voters more sticky or not? Like, is the anti-vote stickier than the pro-vote?
Well, this is what we're going to find out, is what's more motivating, right? Support for your candidate or desire not to see the other candidate win. I think Trump has benefited over time from enthusiastic support from his base and base turning out to support for him. But the negative feeling can also be a very strong motivating factor and could drive folks to the polls specifically to vote against Donald Trump because they don't want to see him back in the White House. We're going to find out what's more motivating, voting for your guy or voting against the other guy.
What does the polling show about some of these swing voters, the more independent folks? See, what I've been told, or we've been told by a lot of pollsters, is that the core Trump folks are going to stay with Trump no matter what, and probably something similar on the Democratic side. It's the folks in the middle. What do we know now?
I think we still don't know exactly how those folks are going to play out because we're particularly interested in how suburban voters, particularly suburban women, are going to vote in this election. And we've seen, even in our tracking poll, changes in that subgroup, particularly in views about the economy. So I think we have to get closer to the election to really see how these folks are going to play out. And it's going to be, maybe the deciding factor, how these independents and in particular suburban voters, decide between Trump and Biden. And frankly, how motivated they are to turn out because, particularly, but if Biden's going to win these swing states, particularly Wisconsin, Pennsylvania, and Michigan, he's going to need a very strong turnout in Democratic cities.
Mm-hmm. Do what voters care about, did that change at all month to month?
Interestingly, we saw a little bit of a decline in the importance of the economy as a top issue for voters and an increase in immigration as a top issue. So sort of a loosening of the economy and a more heightened emphasis on immigration, which presumably would be bad news for President Biden. But we also saw folks who trust Trump more than Biden on the economy, that number go down a little bit. And also the folks who feel they were better off financially under Trump than Biden also go down a little bit. So we're seeing a little bit of softening of the advantage that Trump had on the economy, and in particular how voters feel about the economy.
Mark, 30 seconds. How about the age issue? Both sides are playing that up at the expense of the other.
Yeah, exactly. And I think, the one takeaway from this poll is, Biden has sort of helped in that regard. I think primarily because of his State of the Union address. Age is still is a concern and will be a concern, I think, up until the election. But if nothing else, Democrats, I think, feel a little more comfortable that it's not going to be a decisive issue that's going to sink Biden's campaign.
All right, great stuff. Really appreciate it. Thank you very much. We look forward to the next poll as well. Mark Niquette, he's Bloomberg Real Economy reporter, joining us in the latest morning consult poll. I want to see what, apparently in the poll too, Nikki Haley voters seem to be moving towards Trump, which I found to be quite interesting because, why?
I don't.
But then is that like an anti-Biden thing versus a pro-Trump thing?
It's interesting. We'll have to see when we get closer to the election, see how some of these things start breaking here. Do we know whether they're ever going to have a debate between the two?
Ooh, good question. I don't know.
I haven't heard that talk recently, so I'm guessing probably. I mean, you would think you'd have to, right? At some point.
I mean, We've never had this instance, though, where we've had two presidents
Exactly.
running against each
Yeah,
other.
I think
so
we know where
they don't
both
need the
stand.
press,
Yes.
right?
No.
I don't know. I don't know about that. Man, I would tune in and I would just be in pain for like the
Yes.
whole however many hours. You're looking at markets here that are doing something that are pretty much flat. Let's be honest. S&P is up just about 0.3%. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We are flirting with a few closing records today. The S&P record to beat, 5,241. Right now, we are at 5,232. The NASDAQ also flirting with a record. That number to beat at the closing is 6,428 right now. The NASDAQ at 16,443. The Dow also skirting on the edge of 40,000, so we're keeping an eye on that as well right now. But all three are up about 0.3%. Over to yields, the 2-year yield at 4.61%. That is down about 1 basis point. And the 10-year yield at 4.25%. That is little changed. The 30-year at 4.41%, and that is little changed as well. As far as spot gold, it's higher at $2,178 an ounce. And over to oil, we have NYMEX crude, $82 a barrel. Brent crude at $86 a barrel. The dollar is stronger, the Japanese yen stronger, euro stronger, the British pound is weaker, Bitcoin at 69,432. That is your Bloomberg Business Flash. Paul and Alex.
All right, Lisa Mateo, thank you so much. We appreciate that. Alex Steele, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube, so head over to youtube.com and search Bloomberg. And you will find it. And we're all right there. We're also on autoplay in your dashboard. And you can find us pretty much every technological platform here. All right, let's see what's happening with these markets. As Lisa was just reporting, got another day of green on the screen here. S&P up 0.3%. You know, year to date, the S&P's up just about 9-10% here, off of a good 23. And I think that's taken a lot of people by surprise here. Let's check in with somebody who does this stuff for a living. Carol Schleif, Chief Investment Officer of BMO Family Office, located there in Minneapolis, and she's joining us via Zoom. So, Carol, what do you make of this market here? What's driving stock prices higher, in your opinion?
I think there's a growing belief that whether it's not even a soft landing, it's no landing at all. There's a growing belief in the sturdiness of the economy and what's going on in the U.S. There's also a lot of fiscal stimulus that's finally freed up. It's been teed up for the last couple of years, and now it's actually moving into markets and supporting things. We're doing exciting things like reshoring. We're building artificial intelligence, data center hubs. There's a lot of activity going on. And if you look under the hood at what the markets are showing, they're showing it's not just those magnificent seven leading the pack anymore. It's a much broader basis. And you've seen a broadening out of the leadership, which is very reassuring and supportive for constructive markets.
So, again, a lot of folks, I guess we did see that in that November, December move in the market, a broadening out of performance. How important is that for the market? Because it just seems like technology's got to lead this market, but you need to see how some other sectors participate as well.
Yeah, it's definitely important for the sustainability and durability of a market advance to have most of the participants or most of the constituents participating. And you're definitely seeing that. You're seeing a turnover where you've got stabilization, some interesting things going on with financial services. You've got consumer goods companies moving, both staples but more particularly the discretionary side of things. We'll have earnings coming up in a couple of weeks, so we'll be able to start parsing through some of that. But it really is vital for the ability of the markets to carry on, that more and more are participating in it. And it's interesting, on a day like today, even a lot of those Magnificent Seven aren't in the top tier. They're holding their own, but they're way down the list of contributors. And so it's really important for this market to continue to see more and more stocks participating.
How do you judge that, Carol? I mean, because they're not going to be able to catch up to like pre-pandemic levels. You can make an argument, like maybe energy and industrials we've seen, but how do you know which sectors are going to be able to have that real bounce and which ones are just going to be too exposed to rates, say, and the consumer?
I think it's really important to not necessarily just invest sectors, but what you saw, especially in the last quarterly earnings, is you saw a big dispersion even within sectors in terms of who was adapting to higher rates, who wasn't, who was adapting to higher costs, who wasn't. You saw a lot of credit attributed to individual companies that talked about right-sizing businesses where they were laying off in one part and investing strategically in another. So it really is a stock picker's market. So maybe the bigger question is, do we go back to a predominance of active management and those active managers who are able to parse through the companies that are really able to accommodate? But one of the things that's helpful as companies try to figure out, can they adjust to an overall higher terminal rate, is if the Fed is done raising rates, which they seem for all intents and purposes to have indicated in a variety of ways that they're done raising, regardless of when they start to lower, it's easier to model out what impacts rates have if they're not continuing to rise. At least you can figure out what your cost of capital is and play that through. So, it's a real arduous task, if you will, because it's a company by company, not necessarily industry by industry exercise.
Are there some sectors, given that, it's a bottoms-up picker's market in some people's perspective, are there some sectors that generally you guys are favoring at this point?
Yeah, there's a variety of sectors. We've liked industrials for a very long period of time, not the least of which is because the fiscal stimulus tied up or teed up, if you will, for those sectors. We've liked industrials. We do think financials will need to play. Healthcare is very important as well, and there's a lot of innovation going on in medical devices, biotechnology, services, lots of different things that are benefiting. And technology and communication services are important as well because they, as you mentioned, there's such a significant component and they filter over into virtually every other industry as well.
What do you do? This is totally talking my own book, but some of the stocks that have done really well this quarter is Constellation Energy. It's a straight up nuclear power company. And that has done really well as a derivative play of data centers and AI because you need so much power. And I'm wondering if this is like the octopus legs for AI, like you have to go into those sectors that will also really benefit. How do you think about that?
Yeah, I think it's really important because it's not just, to me, it parallels very much what happened in the first .com, first internet build out in the 95 to 2000. You had a lot of short-term exuberance around anybody who could put .com in their name. Mm-hmm. But the more important longer-term play there were the people building out the actual infrastructures, the routers, the data centers at the time. And similarly here, it really is the play on, it's great to say you're going to put up a data center, but you have to hook it to the energy grid. You also have to make sure you have water rights for the cooling technology there. So there's a lot of secondary and tertiary knock-on effects that go there. And so I think investing more broadly that way, because artificial intelligence, data centers, reshoring, all of that stuff is not just a short-term cyclical play, it's a secular play. And so figuring out who's going to benefit and where the stocks may not have moved. Now, Constellation may have moved, but there are other broader implications for those industries that you're spot on in terms of highlighting those. So,
outside of, we're going to have earnings, you mentioned in a couple of weeks. What are you going to be looking for here? I mean, I'm thinking about valuation in this market, Carol. I mean, we've seen big moves off the October lows. I'm not sure I've seen a commensurate move higher in analyst estimates here. What's your valuation call and how important are earnings coming up?
Well, earnings will be really important to watch and listen for, and there'll be a lot, as there have been in the last few quarters. There'll be a lot of analysis, not just of where the earnings come in, but what the companies say in those transcripts and in those earnings calls. And people will be watching pricing power, what they're doing with employment, what they're doing with CapEx and expansion plans, what they might be doing with mergers and acquisitions, how much cash is on the balance sheet. There'll be a lot of details that people will be looking for in those earnings. And you're right, valuations are not cheap. They're not hyper expensive necessarily, and particularly when you look at technology and the way that those growth trends have come in, those growth trends have supported where the stock price movements may have gone, even though valuations are somewhat high. But critical sectors to watch will be those consumer names. How much pricing power do they have? Because it does feel like in the last couple of quarters, there's a lot of consumer pushback in terms of what the grocery bill is going to cost or what they're willing to spend on and what they're not willing to spend on. But consumers are still spending. Yeah. Companies are still spending. So,
before we let you go, what do you think the lever will be? Because I feel like in the last earnings season, we did learn that the pricing power of companies had kind of hit its max. Then the levers to keep the margins going, what is it going to be?
Well, I think on the intermediate and longer term, investors have to realize that margins are at or close to all-time highs. In terms of growing that and sustaining that gets to be pretty tough. But companies will be looking at, is there somewhat of an easing in? Because there was a lot of pressure on employee employee salaries and overall income and the hiring. You've seen employment come into better balance, so hopefully people won't be as pressured to offer substantial signing bonuses and increases, although it would be nice from a consumer standpoint to at least keep pace with where the inflation rate is. So companies will be parsing every item they have in terms of looking at cost efficiencies and where they can save a buck there. But it'll be tough, and as investors, we're going to have to adjust to the fact that margins can't grow to the moon any more than stock prices necessarily can.
Okay. Cal, thank you so much for joining us. Really appreciate it. Cal Schleif, she's the Chief Investment Officer at BMO Family Office. We appreciate getting some of her thoughts with our news in New York City. Here's Michael Barr.
Paul, Alex, Lisa, thank you very much. A container ship lost power and rammed into a major bridge in Baltimore overnight, causing it to snap and plunge into the river below. Maryland's governor says the ship's mayday call enabled officials to limit traffic on the Francis Scott Key Bridge before the crash that caused the collapse. Governor Wes Moore says authorities on the bridge were able to stop the flow of new vehicles onto the bridge, which saved lives. The governor held a news conference this morning.
We will get through this because that is the Maryland spirit, and that's what Maryland is made of.
Also at the news conference, Bill Delgado with the FBI.
I want to be clear that there is no specific or credible information to suggest that there are ties to terrorism in this incident.
President Joe Biden is expected to speak about the bridge collapse later today. A court victory for WikiLeaks founder Julian Assange in the UK. London's High Court has ruled he cannot be extradited to the U.S. to face espionage charges unless officials guarantee he won't get the death penalty. Assange's wife, Stella, said her husband is being persecuted because he exposed the true cost of war and human lives.
Now, the UK courts have invited the United States to issue assurances. The Biden administration should not issue assurances. They should drop this shameful case that should never have been brought. Julian should never have been imprisoned for a single day. This is a shame on every democracy.
The U.S. government said Assange's actions went beyond journalism by soliciting, stealing, and indiscriminately publishing classified government documents that endangered innocent lives. The Supreme Court is hearing arguments today in the new abortion case that could affect women across the country. It's about the drug mifepristone. Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stock market bouncing back with the S&P 500's rally for the year approaching 10%. Now, this comes after 2 consecutive days of losses. Right now, we have the Nasdaq up about 0.3%, the S&P 500 up 0.2%, the Dow up about 0.1%. Now, investors a little bit cautious ahead of the Fed's preferred inflation measure on Friday. This morning, we learned that U.S. durable goods orders, they rose in February for the first time in 3 months. They had bookings increase 1.4%. That was higher than expected. And then we also learned U.S. consumer confidence that held steady in March. Over to the bond market, the 2-year yield at 4.61%. That's down about 1 basis point. The 10-year yield at 4.26%. That's up about 1 basis point. And we'll take it to the 30-year at 4.42%. And that is little change right now. We have spot gold higher at $2,171 an ounce. And over to oil, NYMEX crude, $82 a barrel. Brent crude at $87 a barrel. We have the dollar weaker, Japanese yen weaker. Same for the euro and the British pound. Bitcoin right now is lower. It's at 70,268. That is your Bloomberg Business Flash. Paul and Alex.
All right, Lisa Mateo, thank you so much. We appreciate it. Alex Steele, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're also streaming live on YouTube. So head over to youtube.com and search Bloomberg Podcast, and that's where you'll find us here. All right, I think it's starting to get serious here. Here's the news today again on Apple. Apple iPhone shipments in China fell about 33% in February from a year earlier, according to official data, extending a slump in demand for the flagship device in its most important overseas market. This is getting my attention now. I need to check in with Mandeep Singh. He's our senior tech analyst for Bloomberg Intelligence. Mandeep, I mean, 1 month, okay, 2 months, I mean, it's starting to stack up here. What are we hearing from Cupertino about China, risk and opportunities for them?
I mean, right now, I think the 2 data points that we got this year, one in February from the source called Counterpoint, where they said iPhone sales were down 24% for 6 weeks. Now it's validated that they're actually down 33% for the month of February. So clearly, they have a problem both with the demand for iPhone as well as competition. I think one of the things that doesn't get as much attention right now is the fact that Huawei has a comparable phone to iPhone. And the reason they have been able to do it very quickly is because of the supply chains that Apple created in the region. So a lot of those suppliers are actually making the phone for Huawei. And they don't have to do much because Apple is at the cutting edge when it comes to the chip, the assembly. And so all those supply chains guys are actually diversifying themselves and making phones for Xiaomi, Huawei. Huawei is the notable share gainer here, but that just goes to show that, they are also diversifying.
Which also goes to show why Tim Cook is in China and staying that extra day to meet with quote-unquote top leadership, which everyone seems to think is Xi Jinping. What's going to be his pitch?
I mean, look, I think Apple...
Please use my phones.
Yes, and they used to have 20% revenue exposure to China. It's gone down to about 15% now. But when you think about the weight of China, both as their biggest supply chain, 98% supply chain still resides in China, and 15% revenue exposure, he doesn't have a choice. And that's where he has to make sure, he's aligned with the party and, the locals, and they just want to make sure they don't end up losing share. Forget about growing in the region. It's all about keeping the share they have right now.
I don't know the answer. I can't think of an answer for Apple, particularly on the supply chain. I can pencil out China going to close to 0 in terms of sales. I could pencil that out, put a multiple on it, and there we go. There is no Apple without China in terms of supply chain. There is no Apple without that supply chain.
And for the longest time, we thought the risk for the suppliers is if Apple is not giving business to them, they don't have anything to manufacture. Well, guess what? They have, Huawei and the local guys. And so that's how they are going about the business right now.
So if I'm Tim Cook and I have seen this for years and I want to diversify my supply chain, what does that look like? What is that?
I mean, we did a big report. It's a multi-year,
Of course you did.
yes, and you know, the assembly part is already moving to India. We've seen a big ramp up in India. Almost 22% of the phones last year, iPhones, not the highest end, but a lot of the models were assembled in India. And gradually, they will have to diversify, you know, the assembly side. The problem they are running into is all the components that you need to manufacture an iPhone and the complex device that it is. It's not that easy to just, you know, lift and shift your supply chains into a different regions. You need there are so many dependencies, both with TSMC and the other suppliers that feed into the Chinese assembly. So all that needs to be relocated, and it will happen. It's a multi-year effort, and right now the focus is also shifting towards on-device AI. I feel the reason why the Chinese government is really cracking down is because the next wave of this is AI will run on device, and they don't want a US-based company probably to be running AI, you know, on device in the region. So that's the other aspect of it.
Year to date, the stock's down 11%. Trailing 12 months, it's up 7%. Boy, I can make it from here. A bear case could be made here, big time.
I mean, look.
I mean, a long-term, multi-year bear case here. I've got supply chain issues. I've already zeroed out my China revenue. And
Services revenue is going to be changing because of all the new laws, right? In terms of court cases.
Could be.
Yeah, the DOJ lawsuit, it's coming at the worst time for Apple. I mean, they should be doubling down on other markets where they can acquire share that they may end up losing in China. Obviously, the DOJ lawsuit is not helping, and the EU regulation, the Digital Markets Act. So from a regulatory perspective, you're right. I think the bear case is really around the revenue exposure, and I'm sure the supply chains, they'll muddle through in terms of making sure they can still make the phone, and, you know, as long as the manufacturers over there are getting the business, they don't mind Apple continuing to, you know, have the supply chains remain intact there. But I think the hard part would be the EPS drawdown as a result of the Chinese revenue going down.
I mean, I'm 32 buys, 18 holds out there, and 5 sells. That's about as middle of the road as I've seen Apple in 20 years in terms of the street.
And its weighting in the S&P is also falling.
Yeah.
That too. So, I mean,
I equate it's similar to Tesla, actually. In some ways, Tesla and Apple are very similar because Tesla also has a revenue exposure. It also manufactures its cars. But I think Tesla's supply chain is more diversified. That's the one big difference is they do manufacture elsewhere.
Here's a dumb question. Why can't they just build stuff in the U.S.? Like, I know it's not as easy as, like, here's a plant, let's plop it down in the U.S. But, like, why is India the next port of call? Like, why not the U.S.?
Well, again, it's the components. So think of the bill of, there are certain components that can only be sourced over there. And over time, they can move things around. But if you're talking about, a $1,200 phone, it has a certain bill of materials, things are done in a certain way. That's why it comes at that cost. We're not talking about a $5,000 phone. If they, relocate things overnight, that price could double, triple.
I mean, okay, that's crazy. But do you remember when the iPhone was coming out at $1,000 and it was like, no one's going to pay that. This is insane. This is ridiculous. And now it's like $1,200, whatever.
Yeah, exactly. The market adapts as we've seen here. All right, so if you're a bull, are you simply saying, there's 2 billion units out there. They'll figure out a way to make money off of those things and that ecosystem.
I mean, the bull case is still the ecosystem and the fact that they have an installed base of 1.3 billion users, who still have the iPhone and they will refresh the phone at some point. And everyone still likes the iOS ecosystem. I think what Huawei is doing is laying out a path where people can move out of the iOS ecosystem, and then the whole AI thing and the regulatory stuff, I think, is just making it worse. The timing of it is just worse for Apple right now.
Interesting. So the developer conference in June, right? the pressure is going to be big for them to deliver something.
And remember, they're looking at leveraging Baidu now. The reason for leveraging Baidu for AI in Chinese region is just to please, the fact that they are using a local AI player as opposed to deploying their own AI. So that's the other aspect of it. AI.
All right. Mandeep Singh, thank you so much. He's the best. Mandeep Singh.
Seriously.
He covers all the technology for Bloomberg Intelligence, along with Anurag Rana and the whole team around the globe, London, New York, out in Silicon Valley. We've got a big team in Asia as well. So we've got the global tech space covered head to toe there. We'll have more coming up. This is Bloomberg.
Company news headlines on Bloomberg Radio.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Shares of Trump Media and Technology Group, they are soaring. Its trading debut, the stock's trading on the NASDAQ under the symbol DJT after completing a deal with Digital World Acquisition. Bloomberg's Abigail Doolittle says it gives the parent company of Truth Social more than $275 million in capital.
A win for Trump amid legal and financial woes, we should say. And at current levels, Trump's shares are worth, it's hard to calculate at this moment, at 11, when it was up 11%, that his shares would be worth $6 billion. So many, many multiples of that. He is subject to a 6-month lockup along with performance requirements.
Shares are up about 28%. Shares of Reddit extending gains for a second day. The social media company rallied 30% on Monday. Right now, Reddit is up about 13%. iPhone shipments in China, they fell about 33% in February from a year earlier, and that has Apple shares lower. Apple shares, they're down about 0.1% right now. And we have some news from Visa and MasterCard. They've reached a $30 billion swipe fee deal with merchants. Right now we have Visa up about 0.5%, same for MasterCard. Krispy Kreme shares, they soared the most since July 2021. McDonald's agreed to bring the chain's donuts to restaurants nationwide. Bloomberg's Simone Foxman says consumers actually like the idea.
We understand that there was a test of selling Krispy Kremes at McDonald's in 2 cities in Kentucky, Louisville, and Lexington at 160 restaurants. According to a statement announcing this deal this morning, the demand exceeded expectations, and so Krispy Kreme donuts will roll out in the second half of 2024 and end up in all McDonald's locations by the end of 2026.
The shares are up 29%. That is your company news at this hour. I'm Lisa Mateo.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Tuesday, everybody. I'm Alex Steele here alongside Paul Sweeney. You're listening to Bloomberg Intelligence here right on Bloomberg Radio. We're live from our Interactive Broker studio in Midtown Manhattan. You can also check us live on YouTube as well. We bring you all the top analysis from our top analysts. How many times can you say that? All across the world. They cover about 2,000 companies. Let's also get you updated here on World and National News with Michael Barr. Michael?
Thank you very much, Alex, Paul, Lisa. Baltimore Department of Transportation officials provided the latest updates on the overnight collapse